Okay, Pete, we'll do a shout out while you're coming up to our friends, Mike Byron and the folks here from Nvidia, for hosting us. We're here at probably one of the, next to the Apple building, one of the coolest buildings here in Silicon Valley. But in my opinion, certainly one of the coolest companies in all of Silicon Valley. So thank you, Mike and team. And thank you, everybody, for joining. And I will turn it over to Pete.
Thanks, John. Thanks, Mike. And thanks, everyone, for joining in person. We've got actually quite a few here. I think we've got six or seven customers here. We've got several partners and consultants. And we've got some folks in Germany that are ready to present. It's very late there, so we're eager to get started. So this is, believe it or not, user group meeting 17. We actually started this literally 4 years and 11 months ago in Silicon Valley, and now we're back almost on our 5th anniversary. And anyway, sorry, 4th anniversary, and we are ready to go. Yeah. So John, if you just want to click on the slides. Right. So again, we're all here about learning and really always progressing our knowledge and moving forward about SAP revenue accounting reporting, which is really a purpose to automate and simplify revenue accounting. And many of you here are experts in this, and the purpose of this forum really is to share that knowledge and make sure everyone's up to speed on the latest information. So let's go to the next slide. Thank you to the community. We have now, literally we have about 700 to 800 active members, which is great. And today we had about 100, I think 40 registrants, which is great. So thank you for continuing to contribute. And believe it or not, we will be in 4 weeks. We'll have our first user group meeting in Germany. Vodafone in Dusseldorf has graciously volunteered to host, so we'll be having a meeting there in 4 weeks. Let's go to the next slide and we can talk about the agenda. So we'll have a few minutes here to welcome, and then we'll have Martin Volk go through the ECC version, or RAR 1.3, and then Gerald and Volkmar will cover the S4 1909 updates. Then Diakar is one of our co-authors is here, and anyway, he will be giving a quick presentation. Sorry, is something wrong? Sorry, we got a technical question here, sorry. Oh, they can't see the slides. They can't see the slides. Okay. Yeah. All right. So anyway, we'll also have some books. Diakar has co-signed some books, which Cody also signed. So a couple customers here in the room will be getting some books, which will be fun. And then we'll have the customer story by Brandon. It's great to hear the Nvidia story. Then we'll have Steve and Shekar go through some migration advice or tips and tricks. And then we'll have Surabhi later after break go through really kind of, will expand the capabilities or expand your knowledge of the capabilities of RAR. This is kind of a complex capability around two-dimensional performance obligations. And so the consulting team has worked very hard on this the last couple of weeks, and so we're very eager to see the results of this. And so Surabhi will go through that after lunch. Then we'll have some Q&A. Also, we've had some requests that we have a little bit more Q&A during these sessions. We'll try to manage that a little bit more real time. The challenge is if we get too many questions, then the agenda gets off track. So we may have to push questions to the end, but we'll try to manage that the best we can. Again, the mission statement goals of the community haven't changed. Really, this is part of the knowledge sharing and experience sharing, as well as just informal networking. We've already done that here today. We already had a little bit of coffee. And thanks again, Mike and Brandon, for hosting them. And this is a great venue here, plenty of room, very, very high tech, so lots of energy, which is great. And then we've got our folks from the product team on. They'll give you the latest on the product side. So looking forward to another great meeting. So I think with that, we can get started. Go back to the agenda slide, and we can just make sure everyone's hearing us okay. Maybe jump over to Q&A, make sure all the logistics are, the chat box, make sure everything's coming through. Yep.
Okay. Remind them that, so remind them that we're recording it.
Right. So you may have seen right before, a couple days ago, you got an announcement of a follow-up from our meeting in Dallas. So we'll try to do that going forward. So you have now, from the meeting in Dallas, you have all the presentation materials and a recording. There's also a link on the Bramisol website that will mirror that. So you can go to that event page and always get the core presentations and the recording. And we're also recording this session, so we'll do the same for this session. So I think now we're ready for Martin.
Okay.
So Martin, we have the slides here that you sent, so we can drive if that's helpful.
Yes, there is a little update to the slide, but I can mention this verbally. That's not a problem.
Okay. Okay, and then we'll send out the updated version as the follow-up.
Yep. Okay. Okay. I would like to tell you a little bit about the on-premise, or let's say the add-on release 1.3. Actually, maybe you can just move on. Can I do that, or the next slide, please? So actually, we are dealing here with support packages, which is, as the name says, a support package to mainly geared to focus on stability and robustness of the solution. Means that we are dealing here with bug fixes, but nevertheless, we also want to take some requirements, if these are feasible, to embed that into nodes and to deliver that, over time. But these are rather quick wins and minor enhancements, but nevertheless, it can be some sort of supportive for you. But I would like to mention here again that the main innovation of revenue accounting and reporting will be delivered in the development landscape, and that is currently the S4 HANA versions. Latest one was the on-premise 1909, and will carry on over time. So what I've said last time is that we plan to have the support package 10 out there on September 9th. That is done, so we are on track. So all what I've said there is now up. It's now gone, the presentation. Sorry. Hello? Hello? Can somebody hear me?
Yeah, we can hear you.
Martin, we can hear you.
Yeah, but
we just have a setup issue in the room, Martin, so just pause here for a few seconds.
Okay.
All right. Martin, you're probably seeing it now.
Yes, I see it.
Okay.
So what I wanted to mention here that we are now that we are still on track, and that the next support package is now planned to be delivered December 16th. But as you may know, support packages are rather gathering nodes, and some of the the nodes we are delivering with support package 11 are already there. Next slide, please. What still remains from last time is that we want to have a less frequent delivery, because we think that the solution is more robust now, and it's better to apply for customers if you have a less frequent delivery. So if you have to stay, let's say, actual or in a current state, in a current position here, at the moment you have to implement every quarter a new support package, which is quite cumbersome. And so we said that we will go for a half-year frequency of the support packages. So next one after support package 11 is probably issued in June 2020. but we will see how it'll look like. If there's a need to bring that forward, we will do so. Next slide, please. So all what you can have to know here, you see there are some links where you can get access to all relevant nodes for support package 10, 9, and 8, and of course with support package 11, it will be not fixed now, so there will be more nodes to come. But here you have definitely an overview of what will be delivered from bug fixing, even to feature enhancements of the various support packages. Next slide, please. So last time I've mentioned that we would like to focus a little bit on improved reporting, that we will deliver some reports which we discussed with customers, and actually we had also some good information from them, also from our company. So people said that we lack a little bit of information for auditing processes. So it is very cumbersome to retrieve data for this process. And so, for example, retrieving the history of contract modification and its impact on posting. And there are some difficulties in reconciliation, especially if you have a sender system which is not SD. So we have a reconciliation report in place, but that is specifically developed for SD, and we enhanced it now with body implementation so that it can be used for other sender components as well. In the end, we are on track with that. Maybe just the next slide, please. So we have already some notes available. So for example, the notes 2844377 to report on changes on allocation amount, allocation effects, etc. And the other note is 2835924. That is displaying and reporting on change histories of revenue accounting contracts and the correspondent performance obligations. Here we have issued already some notes, but these are pilot notes. We would like to have some feedback from customers, and ideally as soon as possible, because we want to have these nodes general available, or let's say in standard, with the support package 11, and there we have a development close by beginning of November, and therefore we require this feedback as soon as possible. So if you have any demand here, and if you are interested into that, just open a ticket or an incident, and we will assign you to these pilot nodes, and then you can test it in your environment and provide us feedback. And we strive to implement or to process this feedback once it is. Sorry, I just have to stop. Sorry. We want to process this feedback as if it's bug fixing. Of course, we will do that, and if there are minor enhancements, we will do that as well. But of course, if it's a major requirement, then we are also open to discuss that. But most probably, we cannot implement this in time for support package 11. But we are also open to discuss any kind of requirements like this, and then we can decide whether we can have an additional report, or if we have to bring that into a roadmap discussions with S4HANA, with the latest releases there, because the analytic strategy is a little bit different in S4HANA. We want to leverage there the S4HANA capabilities with CDS views. Here we are talking in the on-premise world in ERP. With the add-on, we are talking about reports and data sources, which is a little bit different to S4HANA. Additionally, we will have another node. That's let's say that's the changes in the slide. This is not yet there, but it will be issued by mid of next week. This 2823583, that is the enhancement of the reconciliation report. Here we have a new body filter to integrate different sender components, and also to integrate multiple sender components. So if you have, for example, a contract there which contains data from different operational systems, for example, from SD and FICA, then you can deal with that now with this reconciliation capabilities we will provide. We will provide this body filter that you can also do that for your non-SAP systems. But we will also provide the content for SD and FICA that you can do that out of the box for these operation systems as it is for SD and FICA. Of course, there is some information required how to do that for non-SAP systems. We will try to provide documentation by support package 11 so that you can implement that by yourself. Next slide, please.
So, Martin, just to go back. Yeah, let's go back and just clarify. So the first two items we covered, well, we covered all three of these at the last meeting in August in Dallas. But the first two items are pilot notes. So just for people on the phone so they catch it, you have to open an OSS ticket and request it, right, to get the note. And that note will work on most systems, right? I guess, are there any specific requirements for that note, Martin, or it should work on any of the versions that are out there?
Normally, it should work on any of the versions of reasonable versions. Yeah. So if you say you have a support package 8 in place, it should also work.
Okay. And then
it is a report. It's actually a report, so there should be no specific prerequisites for that.
Okay, and then if there's any minor issues, just log that as a ticket. If you want in-depth discussion with you, we have to put a feedback agreement in place, right? I mean, there's some customers that may want to get into the details and really discuss it with you. Then we need to make sure there's a feedback agreement in place.
I think if there are further requirements for analytics, I think we have to discuss that under a feedback agreement. But then also involve development here. I'm talking here from the maintenance point of view. I think then we are happy to discuss that with you as well. But I think we need also to involve Volkmar and his team. Yeah.
Understand. Just trying to make it clear for everyone listening. And then the item below. So wait, on these first two notes, pilot notes, are they available now? Or
the first two notes are available now. They have been just released today. What I've heard are not released. It's a pilot note, yeah.
Yep.
For the standard, we want to release that beginning of November, but you can get them as you said. Customer need to open a ticket, and then we can assign this note to them.
Right. Okay, and the third one, the 282.3583, that one's going to be available next week. Is that right?
Mid of next week. We plan it for Tuesday. Maybe it's Wednesday.
Yep.
So we are still testing that, but that will be standard and can be, and customer can implement this right away. Here you get a body filter to integrate into the reconciliation report any kind of operational system. Also, for example, if you have a contract there, which is where you get RAIs from different standard components, then you can also do the reconciliation there. And it is also possible to integrate non-SAP systems. And for FICA, and of course also for SD, yep, you get a solution out of the box.
Right, and the other main thing for customers to understand and partners is that the documentation for this is not fully available, right? So the note's going to be available late next week. The documentation's still coming.
There is, of course, with every node, there will be a documentation, but we think that we need to have some sort of a how-to documentation, how to deal with, for example, non-SAP system to integrate in this reconciliation.
Okay. All right. Thank you.
Okay. Next slide, please.
Okay.
Okay. So, question.
Yeah, I have a question regarding the report that you're going to bring out. So we are in the process of upgrading RAR to FP10, and I was wondering if there is a functionality impact while implementing those nodes.
There should not be a functional impact because it's a report.
Is there any functionality impact on the current process?
I can't hear you.
It's just a report. Yeah, he was wondering if there's any process change with these notes, and I don't think so. They are just reports, right? There's no process changes.
Yeah. Actually, to be honest, we looked at some solutions in our company, and we make this now available also for other customers, and they've developed this stuff. I think since half a year already. So we productized that from a custom coding from our company.
Yeah, my understanding is it's today you have to go into the individual POBs to see the change history that is pulled from the change tables. So the report will just pull the information that is already saved in some of these tables. It shouldn't impact anything steady state. It's purely a report.
That's my understanding as well.
Okay. All right. Thanks for the clarification. I think we can move on.
That's the power of the user.
That's right. That's why we do this.
Okay. I just want to mention our development initiative, the migration cockpit, which had been presented last time. Here is the overview slide of this. Which this cockpit is rather some sort of a guided procedure where you have then the capability to monitor the migration process end to end, that you can check the output on various steps, that you can even reprocess and procedures if necessary in a controlled way. You can do that everything, of course, already today, but in a controlled way at one place. And maybe next slide. Here we said we asked for collaboration. We had already some interest, but I have to mention that we have to sort out this topic, a feedback agreement. So that must be in place to participate. What had changed from last time? Before we had just some slides available, so PowerPoint, and now we can even show a prototype already if you are interested and to discuss future scope. So it's always better to have a discussion based on a tangible output here, and then we can think of how to integrate this feedback from you in our development, and yes, hopefully we get a nice and good feature here in place to safeguard a little bit the migration process. I know before I thought, okay, migration is just a one-time topic for customers, but for big customers, at least what I understand now, this is a more regular, let's say a regular process due to mergers and acquisitions, for example, to integrate new companies and so on. And it's very cumbersome to go through all these steps manually and several times, not per year, but maybe 1 or 2 times per year. So it is good to have some sort of a tool in place to manage this. So
okay.
I think.
Sorry, Martin, just one comment on the feedback agreement. So the feedback agreement is a 2-page document that is beyond the customer's NDA or software license agreement. And specifically, it covers 2 areas. One is SAP, right? We're talking about revenue recognition. Well, we have a revenue recognition group too, and they don't like us to promise features that aren't delivered, because if we do that, then they have to make what we call revenue deferrals, right? And our CFO doesn't like that. So we put this in place. So that's one reason. The other is just intellectual property, right? In the sense of, hey, if we talk about this, it's just, you're giving those suggestions to SAP, and hopefully SAP will then implement it, and you won't request a license fee later on for that, right? Because sometimes people think that if they give us a great idea and then we implement it, they should get a percentage, and that just is too difficult to manage. So anyway, that's what the feedback agreement covers. Make sure that we can have discussions about any RevRec or IP issues.
I just want to mention here that during the development of RAR, in the very beginning, we have over 100 of feedback agreements in place. And so the process to get this feedback agreement in place should not be as complicated as it looks like.
There's now a workflow for it, and it's a little simpler. But yeah, we've done lots of these. And Martin says we literally talked to over 100 customers about RAR specifically. So yeah, okay. All right, we can move on to the next slide.
I think that's the last one.
Okay.
Yeah. That's it from my side for the update of the activities. Of course, the last one was just in September, so it's not such a big. There are not such big news, but hopefully you see that we are moving on and that we are carrying on with all this stuff.
All right, Martin, thanks so much. Now we're 1 minute behind schedule, so we got to jump over to Volkmar and Gerold.
Thank you. If you can make me presenter, then I could share my screen.
Yeah, we're trying to get that resolved. Just give us a second. Okay, Gerold, you should have it. You gave it to Volkmar. Is it Gerold or Volkmar?
That should be me, Gerold, speaking.
Okay, it's Gerold, you now have presentation rights. Okay. Yes.
Excellent. So now I start my presentation. I'd just like to get rid of this one. Okay, it's a little smaller. Still, you can see this option for the conference, right? Or is that invisible for you? Okay, I just continue.
Yeah, we're just seeing your slides, Gerold.
Only my slides. Okay, so this is only on my side. So thank you for giving me the opportunity to present. So hello, California. Hello, RAR user group. Hello, Nvidia. Thank you very much for making that happen. I now cover the part on revenue accounting in 1809 and 1909. And I have here a little disclaimer, as I also touch some future plans, and just a reminder that this might be subject to changes. Now talking about revenue accounting in S4, you see here the two general options which we have. So either on-premise or in the cloud. On the premise, we have SAP revenue accounting and reporting, which is positioned on-premise, including also the private cloud. In the cloud, we rather think in terms of predefined business processes where sort of the concrete revenue recognition solution would not matter so much. So we rather think in terms of business processes. The underlying solution here is called event-based revenue recognition, if you might have heard this term already. We have a second option for those customers who are not requiring the S4 environment, so coming from external systems, or for non-SAP customers, which is called SAP revenue recognition, which is also known as RevSim from the Calidus Cloud acquisition. For sort of the presentation now, I focus on the on-premise solution, SAP revenue accounting and reporting. Here you see a little timeline, what we have done so far. So starting from right to left, we have just delivered S4 1909. And before that, we sort of have brought revenue accounting, which was formerly an add-on, which you sort of got to know by Martin from the ECC version. So that was originally also possible to use on the S/4HANA as an add-on. And you see here the latest feature packages and those support packages which Martin touched. However, we have now done that with 1809 also as an integral part of S4. And that happened with 1809, which was also aligned with feature pack 6 from a kind of functionality. And also the 1809 feature pack 1 is aligned with the add-on feature pack 7. So there is a very smooth upgrade, if it's not really upgrade, but it's sort of a process which we could use in order to come from the add-on version also to the integral HANA version. You will have some advantages using that, and this is basically those things which I will cover in the next slides. Talking again through that slide, I already mentioned that we are now an integral part of S4, that we have an alignment with the former feature packs from the add-on, and we also apply something what you know from the add-on, that we would like to understand the circumstances under which you like to use revenue accounting and reporting, as we have sometimes seen quite unrealistic expectations, and we just want to do a little reality check. And so if you launch an incident requesting for the activation of revenue accounting also in the S4 environment, you get a little questionnaire, and then you get sort of access to that solution. Still, just a little reminder, what should be quite obvious, this procedure should not sort of make you thinking that now SAP is responsible for setting up, using or operating revenue accounting. That still, of course, is in the responsibility of you using revenue accounting. All right, so let's now have a look in the new features of revenue accounting in the S/4HANA world. So this is basically reflecting feedback from many customers which are using revenue accounting and reporting, which have often a quite high data volume. The second thing what we have observed is that...
Sorry, Gerald, just can you qualify high volume? Because I think some folks on the line may not understand the types of volume you're talking about.
Well,
we're talking about, go ahead, yeah.
It's, I mean, high volume, this depends a little, yeah, on the expectations, how fast a contract with many performance obligations should be processed and how fast a month-end close should be done. Customer having a few 10,000 contracts in revenue accounting should already have a fast performance with the existing RAR add-on. If it goes to the millions, then of course you need to think about, and then with the new optimized contract management, we sort of have a far better performance for those. Just to give you a rough categorization.
Good,
good.
So we have a follow-up question here in the room.
Mm-hmm.
We are talking in the context of the NWBC as well, like loading up the contracts, POBs, revenue schedule, also the back-end processing is faster.
Yeah, the back-end processing should be overall faster because we have really sort of put a new contract management underneath that, and anything which is sort of related to postings, displaying on the UI, and also processing for the month-end close should be faster then. Actually, for the
Gerald, sorry, one other clarification. And this is a new feature, and it will not. It's not. We can't backport it to a RAR 1.3, right? This is kind of like a new design, and it's only on the S4 version, correct?
Correct. This is on the S4 version only, and yeah, thank you so much to ask those questions, because that makes me easier to explain that. So we have that new contract management with those performance tuning, also with some updated feature, which I show also in one of the next slides, and also a different UI. So we clearly go in the direction of Fiori UI, and as sort of we have changed the underlying contract management a little, this Fiori UI is only available for the optimized contract management. However, both can be used in parallel. So you could, based on a contract category, you could use either the classic version or also the optimized contract version. Yeah, you could derive that by contract in the BRF Plus and get possibly also use already for the optimized contract management for the new contracts. We think that a good decision criteria is also that this is targeted for highly automated contract management and revenue recognition activities. And you also see that we sort of bring that on the roadmap. And in the first version, we also don't support manual user changes in the UI or also cost recognition. It's just some differentiation criteria for those management types. Okay, so that explains actually what I was trying to say in responding to the questions. So you can use that in parallel. As a little heads up, so if you move to S4, then we are working currently, quoting the disclaimer, we are working also to then migrate possibly from...
Harold, hold on, we got a question.
Okay.
Thank you. So, you know, I'm a little not clear on the optimized contract management. You know, such as a function like a day-based revenue calculation, is that also available for 1.3? Or is only available for S4?
Yeah, that's a good point. So the database contract modification would be only available in that fashion on the optimized contract management. There are, of course, some workarounds, like we have also enriched the current bodies, where you can also influence the remaining SSP or the remaining price, that you also could do something like a day-based contract modification. But in sort of in a full flavor, this comes only with the optimized contract management. Okay. Then we also said already that we only support changes coming from the operational system, not from the UI, which is also different from the classical contract management. And also the enhancement options have been reduced currently. This is also a differentiation criteria. So this is really targeting for fully automated processes. And you find here the release note, which explains this a little better. Okay, let's now go a little into those additional features. One of them is a termination with a termination expands. What does that mean? Especially in the subscription area, you can run into a situation where you have recognized more revenue than you have billed, and by a sudden the contract is terminated. That puts you in a situation that the asset needs to be resolved, and as there is no more revenue to be recognized, this would need to go to an expense account, and that process is now supported as of 1909. Then, sort of to give you already a glimpse, and that is leading me also to the demo which I have prepared, that we sort of are fully supporting the operational processes in a way, in an automated way with Fiori UI. Just as sort of a glimpse of those features, it's a quick combine of revenue accounting contracts. You can display the contract. You have an overview, which is going into a big topic, which is called analytics. So we are using here SAP Analytics Cloud underneath of revenue accounting, and I will also show a little demo for that. As an example, the disaggregation of revenue. And something I will not show is the combine of revenue accounting contracts, which you should see here on this Fiori tile. Okay, I would like to use the remaining minutes for a quick demo. And hopefully you can still see my screen. I show now the Fiori Launchpad, and here you see all those ties which are available for my role. I have all roles assigned, so you see basically my areas and responsibilities for the analytics here with all those ready reports. You see also the revenue contract management here with the different ties here and the different activities I can do here. You can also see the periodic activities underneath, and I could go further down for also my other
Carol,
activities.
sorry, we have a question, and definitely this is a Fiori UI. This is available on 1909, and more of these Fiori tiles are coming, but the question is in the room.
Hi. So this question is about the SODs. So does the Fiori handle the SOD part of, because we have a lot of issues with the segregation of duties, and users who are not supposed to view or display revenue contracts, they get it based on what the standard SAP authorization objects are there. So does the Fiori handling in HANA has got the capability of SODs, controlling the SODs?
Mm-hmm. I have to say that we have not touched upon the authorization objects. I would be rather sure that there are good ideas how to achieve that the data can be viewed just by authorized people. Yeah, maybe introducing additional objects and using one of the bodies in order to do some checks, for example. But we have not changed the authorization objects here. Okay. What I like to start
build on
with.
Question for a minute. What we've seen is with the manage activity type, you're giving global access to all activities, create, change, reverse, display. And here in the United States, that really causes concerns with the Sarbanes-Oxley segregation of duties, because now someone like in accounts payable can see an invoice, can pay an invoice, can do all this stuff. And it just completely, I know it simplifies rolling out Fiori apps, but at the same time, it creates a segregation of duty conflict that has to be remediated. Did that express your concern?
I would say that for the company code, for example, and other criteria, we could control who could view the data even within those tiles. And as I said, I would also be confident that there are some ways to also go into the direction of segregation of duties.
But what about if we took this as an action item to follow up? So what I hear a little bit is,
this is what I was going to say, is take this one offline, yeah.
What I hear is that introducing Fiori, we may have a more general issue with segregation of duty, which may not be solved with the core authorization concept we usually have in place with SAP GUI, WebTimber, and so on. This is what I understood the question. So Pete, maybe if you could take the address of the gentleman speaking there, and we could follow up on that matter.
Yeah, so do we have the ability to prospectively account for the contract modifications in non-S/4HANA instances now?
That's a general
do you mean a prospective change, or?
Yes, so for contract modifications, the current ability, or at least for feature pack 3, was the system can do cumulative catch-up adjustments. But for prospective only treatments, is that a new functionality that has been added?
Yeah, that has been added since I think feature pack 4 or 5, something like that. So some time ago, where you could use already the prospective change.
Yeah, Gerold here, Mike from SAP Consulting. If I could add to that, so contract modifications, including prospective modifications, is basically one of the fundamental functionalities that we support. I don't know exactly when that came in. It might have been in support pack 3 or so, but we can certainly support all of the contract modifications. And later today, you will see a demo by Sarabi from my team, where we are taking it literally to the next level, where we're going to show you a day-based prospective contract modification in our scenario. So rest assured that RAR will support your contract change needs.
Thank you, Mike. Maybe as time is running, I like to go into the analytics.
Time's running out, so we keep going, yeah.
Yeah, and so I would like to be now a revenue accountant who would like to have overview about his company code and for the current year. And just with the overview, he's getting those analytics tiles with the recognized revenue. He also is getting the number of the contracts. He's getting the top 5 customers. He could select either by a recognized revenue or also by contractual price. He could also look at the fulfillment types and the top 5 sellers. He could also look at either by the contractual price or also by the allocated price. And talking about analytics, this aggregation of revenue, you see just in a second the HANA Analytics Cloud. You see that you have your BW-like look and feel. And if you're interested, for example, in some further analytics, like how is the profit center maybe behaving, you can easily pull the profit center here and get that here into your list. If that is too much information, you could sort of maybe drop the posting period, and then you have a better view on your profit center, how those are behaving. You can navigate back, and if you like to get now a view on the revenue schedule, for example, you can sort of pick up a contract, and this contains 2 performance obligations, a cloud subscription and a professional service. You see here also the new way how we display the revenue schedule. This is for the first performance obligation, a performance obligation which runs from June till November from the corresponding fulfillment percentage. And if you navigate to those performance obligation, you could also get the details. Here you see also a direct link to the operational document to which you can jump to. And you could either have then a revenue explanation or maybe in a more sort of setup thing. And here you get sort of a view and flavor how this performance obligation is set up, and you can navigate through the different screens. And if you like to go once again to the revenue explanation maybe of that contract, you also see here how we do this revenue explanation. And here you see that the revenue is done by a fulfillment. And here you see a contract modification due to the time now. And as this is covered also later on a little in more detail, this will sort of be also touched later again.
We have a question in the room. Hang on.
Yeah.
Okay.
So the first question is, do you have the ability to make changes on the spreadings from this Fiori app directly?
Yeah, thank you for the question. For the current release, modifications are not possible through the Fiori UI. So that is a big difference to the classic contract management. Currently, no UI changes are yet supported.
Okay. The second question is around the contract modification. So as per the FP7, I think you released the bodies that would help us to determine what kind of contract modification or the change type that's going to be applicable. Yeah, will you be able to show that on the screen? Because that's most important thing is for us to determine why the modification, whether the retrospective or the prospective happened based on that body.
I have to admit that I don't know that. I don't see that in those things. I would need to answer that later. But actually, that is sort of all I wanted to show. So a very quick introduction of those Fiori tiles, Fiori launch parts, you can navigate back, so where we have started. I like to close, of course, saying thank you again, especially to those who've hosted that event, to Nvidia. And a little ad from my side. So whoever is in Sydney from 12th to 14th of November, we will do a bootcamp there, mainly for partners, but also opening up for customers. If you have interest, please, or if you know someone, you can drop a mail either to myself or also to Pete, and then I will come back to you. Having said this, I would like to return.
All right, thanks, Carol. Thanks very much. And then again, so the boot camp is in Sydney coming up in a couple weeks. And if anyone's interested in a deep dive learning about the implementation of RAR, please send a note to Gerald or I, and we'll get you the information. Volkmar, did you have anything, or we're ready to move to the best practice?
Gerald took over the whole part, so we're ready to move over. Mm-hmm.
All right, thanks. Yeah, so I want to thank the product team for joining us very late in Germany on a Friday night, 7 o'clock. So thank you so much for joining, and you're welcome to listen in longer if you want, but we totally understand if you need to drop off. Okay, so now we have Dayakar here, and Dayakar actually is, I'll say, a little RAR lore here, infamous because he was one of the first customers to implement RAR at ServiceNow, kind of down the road here, not too far from here. And he's also co-authored the book, so we have a couple books here. And what we wanted to do is give them out to the customers that were here, but we don't have enough for everybody, but we were hoping that each customer that is here could get a book that's signed not only by Dayakar but also by Koti. So we want to give the first one to Brandon and Mike because they're hosting us. So Dayakar, you want to give them? Is Brandon? Where's Brandon back there? Okay. Yes. Yeah, and I'm afraid if we don't have enough books, then I'm going to have to buy a few more and get them signed and ship them to customers. Okay, what customer do you have? Juniper? Are you guys in the front row? I see Jay here. Would you like a book, Jay? All right, signed by Dayakar. And then you guys, Palo Alto Network. Okay, Naveen, there you go. Okay, what other customers do you have? Nvidia, you're on video. Okay, you got a book. Synopsys. Okay. ServiceNow. All right. You'll get one. Okay, what other customers? Any more? Adobe. Okay. Wait, ServiceNow. Adobe gets the last one. If there's any more customers, then we'll have to ship you a signed copy. Which one's back? Oh, okay, it's the same. You guys have to share. All right, we thought that was a little fun thing, and hopefully you guys appreciate it, and we appreciate Dayakar and Koti for their involvement and you know, helping spread the knowledge of the RAR community. So that we'll turn over to Dayakar. He's got some lessons learned he wants to run through.
Okay, thank you, Pete. Hi, everybody.
Dayakar talks very softly, so we have to encourage him to speak up.
Sorry. Okay. Again, I asked to present whatever lessons learned last couple of years while implementing with different customers. So I'll go through quickly. Maybe we can, I want to cover best practice also to some extent, mostly focus on the lessons learned from working with different customers. Then we'll take some Q&A if you get some time permits. Again, when we start,
just ask tough questions. Dayakar's had it all. He was in the the trenches.
Yeah, definitely. I'll take some tough questions also. Again, we work with different customers. We'll definitely get some customer questions. Okay. Again, when we start the project, right, as a part of requirement gathering, we always get into requirements documents created, and we will make sure we finalize the traceability matrix based on the customer requirements. And before getting into next phase of the project, we always ask, organize the workshops, get the requirements, get sign off from business. Again, it's a new revenue guidelines is not a simple thing where it's not a normal project. We can take any changes in the due course of project timelines. So we need to make sure we have collect the requirements correctly and document and get sign off from the stakeholders. And again, new revenue guidelines includes, disclosure requirements, new revenue IFRS 16 or 16 requirements. Any reporting requirements also very important, where we need to make sure go through those reporting needs. It's not only kind of revenue schedule or revenue guideline changes, it's impacting reporting, which is, we need to make sure cover part of the scope document. And again, we need to come up with high level accounting impact and make sure identify all the use cases required in terms of it may be complex one or simple one. And we've seen customers, they will more focus on high-end high complex customers, like use cases where they ignore the simple one. But we have, we need to make sure, start with the simple one, go with high complex scenarios. And make sure we create a project organization structure. And this is one of the complex projects in your organization. And you need to prioritize the project and make sure identify the right resources from the different teams in terms of, accounting, tax or, revenue, including an FP&A reporting side. So we need to make sure involve all the teams, part of the project organization. The PMO need to be set up properly, and you need to have a detailed plan. Again, transition plan is a very critical. Before entering into the project, you need to decide what transition approach you want to take. That drives your project, initiation or, deliverables. We need to make sure organize workshops, involve right teams in workshops, get all the requirements done. And again, we have to invite proper resources in that. And we need to have a correct exit and, entry criteria. So before going to next stage of the project, you make sure to have the exit criteria met and getting into next phase of the project. Again, I do require, part of my customer interactions working with different projects. Always I try to involve SAP COE group. I know is always helpful. And
which they're right here, right?
Exactly. So we have Joe and Mike. We have people from Ukma, Martin. They are also involving and helping team members on different customers and implementations. So we do have some customer gaps. We find we'd always approach COE group, and they'll help us coming with the design solutions, right? And make sure we document the key design decisions part of the project, and whatever decision you make, it impacts overall project timelines, project, and down the road. So we have to make sure involve document and key design decisions during course of the project with involving key stakeholders. Go to the next slide, please. Again, we have to involve all the teams. Part of testing, right? We have to do IT testing, unit testing, and UAT. And in migration requires a lot of testing. We need to have more iterations to cover migration testing, which again we need to plan separately, or maybe part of IT testing we can do, or UAT. Again, as you said, transition method, what transition method you're using it impacts overall project timelines, overall projects also. Again, in terms of accounting approach, a lot of people use a retrospective approach or a practical experience approach. Again, a lot of customers, we notice they're using modified retrospective approach where it's easy to implement. And going back to retrospective approach is not easy. We do not have historical data. So it's not system-wise, there's no support on that, but at least, a lot of customers went with modified and they are successful. Okay. And we need to have the, cumulative catch-up calculations wise or anything easy with using a modified approach rather than doing retrospective approach. Again, better to use the closed cleanup programs where part of migration, you need to run multiple iterations, make sure validate against use cases, results, and read on the load. So better to fixing the issues and rerun the cleanup programs, and execute. So that helps you to, make up the process very easy. Again, as I mentioned earlier, don't work with complicated use cases to start with, and better to start with a simple one, validate the results in Excel, allocations or anything, and go with the complex one. And again, SAP, and try to explore the standard transition approaches. We need to do some customization because we have SAP standard provided some baddies which we can be used, leverage, and do customization to help transition approach successful. And again, reconciliation, as I think Kumar mentioned just now, I think, Martin, there is some reconciliation reports are challenging right now with RAR 1.3. It's not easy to reconcile the reports, which again, customers end up developing a custom reports. For the month-end closing or quarter-end closing, it's not easy for reconciliation right now. Okay, so we can go to the next one. Yeah. Again, it may impact, what approach you take transition, whether modified or retrospective, or with, full approach. The COA, like chart of accounts, are impacted. And hybrid method is the best option to go with. A lot of customers went with the hybrid approach because they can't go fully retrospective approach. And try to minimize the uses of POB. And when you're designing a solution, make sure minimize the uses of creation of POBs. If you create more POBs, you end up a lot of problems in doing course of after implementation go live. And try to use effectively on the BRF plus. Again, BRF is more like a new concept SAP introduced a couple of years back, but it has been proven good and easy to customize. And try to use that BRF plus effectively. That way, we can minimize the development. Again, SAP introduced in-flight checks on that, which is we can activate that. I mean, a lot of customers not activated. They end up having some problems earlier. But if you activate in-flight checks, it will improve the data consistency and improve the process side.
Yeah. When you said reduce the usage of POBs, right?
Yeah.
It actually depends on your upstream. I mean, your order management, right? Like you may have orders with 20 line items, 30 line items, especially in the software subscription industry. Your orders can be also complicated when you have 20, 30 different product offerings that you are giving, right? Like, so it ties back to your own business processes.
Right.
So like if you look at our scenario, we have like on a monthly basis, we have over 3 million RAIs that get generated, even more than that. Yeah.
No, I'm not talking. Yeah. So maybe it depends on, customer to customer. But I noticed some customers have some issues. They end up creating multiple POBs, which they are not using properly. Right.
Yeah. So Dayakar, if I can chip in here.
Yeah.
We see this situation almost everywhere, where obviously the incoming information from your order management systems will influence what RAR is doing. But I want to remind everyone that the number of POBs you have in your contract is nothing else than an accounting decision. So you need to go back to your accountants. They need to tell you in step 2 of the 5-step model, how many POBs do I have? And there can be cases where 200 line items come in and I have 200 POBs. I can have even more, but most often it can only be one. And again, later today, we will show you a case where exactly this challenge will be solved, that we get very detailed information from the order management systems, but we configure and design RAR such that it does exactly what the accounting requires. So this actually is one of the centerpieces of a robust design to close this gap.
They get generated out of a different BUs. So different BUs wants to see the revenues going in. So if an offering is done with subscription, maintenance, support, and other kinds of products within the same order, then every BU has got a stake in that. So if I try to concise all my POBs and the BU reporting, because we heavily depend on COPA, the COPA goes to the BU reporting level. So how, since when you are showing your demos, so we would like to understand that how that COPA reporting is impact?
So to answer that, as a matter of design principle, that should not drive your design. So again, you should design the number of your POBs based on your accounting conclusion in step 2. If you have additional reporting requirements, that's a reporting requirement. And that's where, once the accounting is done, that's where you need to come in and enrich the attributes of your POBs such that you are able to do the proper reporting. This reporting, which is ultimately is oftentimes management reporting and not financial accounting reporting, must not dictate and influence your design. So this is a secondary step that you take after your initial and primary design is done. And it's not easy. We are very well aware of that. But that should not influence how you structure and design your solution.
Again, POB is, again, based on product category also, right? How you want to report. That may be downstream reporting impact. Again, I want to cover the lessons learned here. Couple of them is, as I mentioned earlier, it's a complex project, and you need to prioritize the project in top of the list, in project list, and as a PMO organization. Again, we need to do detailed assessment before we starting the project. I've seen some clients, just start the project and they're not successful. And we need to make sure do a detailed assessment on accounting side and do POC. Again, proof of concept is very important to come up with, understand what are the requirements, how it is impact organization, and what need to be done. Again, other thing is onboard resource on time. Again, I've seen some customers, they're not able to onboard correct teams like, IT or technical side as well as, business side, and they're not successful. So make sure you identify the right audience at business side, IT side, and onboard them on time. Okay, and again, before finalizing the impact, project timelines or anything, try to understand the transition approach, what approach you're taking and how you're going to execute this project. So that matters to overall project, timelines and kind of lessons learned from other customers I've seen. Again, it's not accounting or IT exercise. It has involves, multiple teams involvement. So I noticed some teams, think, oh, it's only accounting team doing it and revenue team is doing this project and only IT need to involve them. But we end up, some customers end up, going with, tax side implications. They need to involve tax teams. They need to involve the commissions team. They need to involve the FP&A. Again, FP&A is more reporting side. They end of the day, they are reporting, right, to public side. So that kind of things I notice, we need to make sure we involve the right teams on right time. Again, setting up the accounting principles. Again, we need to make sure, design properly. What company code level accounting principle you want to set up, how many accounting principles you want to set up, whether we want to need dual reporting or not. Those kind of matters in the part of the process. Again, the change management is very important here. Again, it's a new process, new change. Try to identify the change management side impacts on the overall project and the overall business side and IT side. Try to get into the scope on the change management side and take the corrective actions. Again, preparing cutover. I've noticed some of them cutovers, we try to do a one-time cutover, just go live. But it's not going to be successful. We've seen some customers fail because of they're not done cutover simulation. So better to do cutover simulation before go live. And part of run simulation, I've seen some customer did 1 or 2 times, they are successful. And it's very important to come up with a detailed cutover plan, which includes, when to do billing, when to close the billing, and basically in terms of freeze period, right? When to do a go live. We have to take a long weekend go live dates, people so have enough time to do a migration and order booking and billing, those kind of things. Again, we need to have a proper contingency plan. I've seen some customers, they don't have any contingency plan. They went go live and they have failed. So we're ready to have the correct contingency plan, how to back out also if required to, because we are playing with revenue numbers and it's very important for any organization. Revenue is critical, and month-end closing and quarter-end closing, those are the very important dates. And if anything goes wrong, we are able to revert back. That's very key for that. Again, train all your resources. I've seen some customers train only revenue teams. They ignore other team members, FP&A other side. But, if you're not training other team members also, and make sure you train the people correctly, and to reduce errors. And we need to have a proper hypercare plan. It's not a normal project like, you have 2 weeks support, gone. No, it requires a lot of support, hand-holding for the business side. And maybe we need to help the customers, maybe 1 or 2 months, month-end closings. That helps customers to be comfortable, like, revenue team is comfortable with closing for the finance side. Again, PMO planning, as I mentioned, it's required. Again, it requires a steering committee involvement. Key stakeholders are key, like CFO level, CEO level. We need to have the key VP finance, the revenue heads. We need to involve them, everybody, make sure that they understand what's happening in the project. We need to have a steering committee updates every quarter, every monthly basis or quarterly basis, and update them. So that's a key for in this kind of projects. Again, as I mentioned earlier, we need to decide, the customers decide, go retrospective or prospective approach, how you will take that one into cumulative catch-up calculation, other things. So again, these are the couple of lessons learned. We have again, my contact details are here. Again, backup. We have my company profile and other slides are there. If you have any questions, I can answer now, or we have some time we can take later. Yeah.
Yeah, we'll have to take them later because we're already running late. But I just want to highlight a couple things about complexity. Again, RevRec, IFRS 15, ASC 606. I've never had a customer come back and tell me, oh, that was an easy project. Yeah. We should have started later, right? You always need more time. Pilot proof of concept. I mean, customers, you get RAR as part of maintenance. You already own it. We've had very good success with customers doing the pilot, proof of concept, whatever you want to call it, but testing out the design and making sure that you've got the right approach. Hypercare, we just ran a customer this week. They got a go live planned in a couple months. I mean, get that hypercare plan in place and make sure you're ready to go. So with that, we're going to go right into our break. Right after break, I think we have 10 or 15 minutes, right?
10 minutes max.
Okay, 10 minutes. We're trying to catch up a little bit, and then we're going to have Brandon give us an update on Nvidia's.
And you
right?
want to be here for Nvidia because he's got the coolest slides. I've been peeking over his No pressure there.
All right, so folks on the phone, we're going to put you on mute for 10 minutes, but then we'll be back with the Nvidia story. And thanks, Dayakar. Yep. Dayakar will be here in the room for questions.
Can you hear us on the phone now? We're good? Okay. I will see. So finishing the rest of our capabilities at go live, and for us, our revenue streams, combination of hardware and support, software and PCS, splitting our subscriptions between license and support, and then we had a fair bit of legacy data on the software front to load into our system. So RAR was able to calculate that from day one. And we were going through our, all good? Great. We were going through our implementation process at the same time as doing our 606 implementation as well. So we were dealing with dual reporting simultaneously with a RAR implementation. So from day one, we were able to do 605 and 606 at the same time. We've since turned that functionality off, obviously. We don't need that anymore, but we were able to do that day one. Next slide. So what do we add after go live? Like I said before, for us, reporting was put a bit on the back burner until we were done with implementation. So right after that, in that first quarter, we added our short-term, long-term classification, deferred revenue roll forward data for disclosures, and our data that we needed for future performance obligations. So all of our reporting that we needed for disclosure, we were able to catch up pretty quickly in that first quarter after go live to make sure that we were ready for our first quarterly reporting. Since then, we've also added additional functionality, and as our business has evolved, added more products and services. For example, we've added installation service revenue configuration. It's one of the things we can account for in our system. The ability to maintain SSP by customer class, like I said before, historically been fairly simple from a pricing standpoint, but as we've evolved, we needed to make sure that our fair value allocation could evolve with us in the system. So we're able to do customer class SSP allocation as well. We've improved on our automation of our posting for revenue out of RAR, and we've already integrated RMAs as well. So some controls. I thought you might find this useful both from a perspective of as you go live and going forward as well. In the beginning, we had a lot of manual controls. Your basic reconciliations with subledgers like you'll always have, but even manual recalculations just to make sure that your system's working right. And you'll typically go parallel for a period of time after go live just to make sure the system's working. So we still do that a little bit today, although on a much more scaled down basis. What we've done is we've added a bunch of exception reporting. So that way we don't need to be doing a lot of manual reconciliations. We have exception reporting where the data that's in RAR can be compared to what's in our sales order system, SAP, to make sure that the data is transferring over right. So whether it's sales pricing, contract dates, what we call pending review blocks for any time software is enabled, and then therefore the service period needs to start in a certain day, making sure that that's all starting at the right time. And we operate a pretty lean team, and there's a question before around SOD capabilities. So one thing that we did is we have a reporting that comes out to tell us any manual change that went into RAR on a quarterly basis. We can get a report that shows us those changes, and we make sure that we already have a review of every one of those changes. So we solve our SOD issues largely through a detective control to make sure that we're aware of any change that was made manually. Now, obviously, during the quarter, we're working with our team members, so those get reviewed along the way. But what this report will show us is what's changed. Then we have the email traffic to retain from a SOX perspective to make sure that when our auditors are looking at our SOD risk, every change in the system was approved. So any data point, whether it's a pricing data point, a contract term data point, all that gets reviewed. Example bugs detected. And I use the word bugs loosely. And there's obviously the sort of the system bug, but there's also just any exception that we find in our accounting. So some examples were triple bookings, very large orders, and like I said before, we're on an early feature pack, and a lot of this stability will go away once we upgrade to new feature packs. But for extremely large orders, we were noticing some instability where a transaction may have been booked multiple times. Maybe the timing was off in terms of the contract term or the PCS start date was off. So issues like that is what we noticed through our controls. It's really helpful to make sure that you have this exception reporting controls along the way, especially as you're stabilizing your system. And like I said before, the feature packs will help stabilize significantly if you stay current. Right now, we're on 3 and about to go to 10. So current state, we close our books in a day when it comes to multi-element accounting. It's still extremely fast. So as challenging as it was transitioning from purely a hardware company to getting used to being a multi-element company, implementing a system, we're still managed to close our books in a day, which is pretty remarkable. Reduced bug volume, I mean, the occasional transaction maybe on a weekly basis. We have to dive into it a little bit more detail. And in many cases, it's down to user error or the data that's in our sales management system that's causing an issue, not necessarily our RAR module itself. We process over 10,000 line items on a quarterly basis through our RAR system right now. And what's our future plan? So like I said before, when the slide's already updated, I said update the feature pack 9, obviously 10 we're going to be updating to. Extended warranty attribution is one thing that we're actually just about wrapping up right now. So anytime we have an extended warranty that would commence recognition for revenue, not in day 1, but starting in year 2, we've been able to add that functionality to our system. Rebates and credit and debit memos, we want to be able to account for that through RAR rather than manually outside of RAR, obviously for efficiency. And then modifications and material rights on a go-forward basis is something that we want to be able to add to be able to account for. So again, we're not doing that manually anymore. Great.
All right. Thank you.
Great.
You mentioned about automation of the posting run. What exactly do you mean by that?
So for RAR postings, we had a 3-step process, right? Calculating liability, revenue transfer, and all that. Instead of that, what the IT team has helped us is automated. So it's just a click of a button. We don't have to run through 3-step process anymore.
Okay, it's not a wrapper. We trigger events through the jobs. So we start the first step, second step, third step, fourth step. Everything is logged. You get an email if there is a failure. So
So it's 3 different. I know we also did a wrapper or a Z around one-stop execution for ABC, but our daily execution in prod is still a step sequence. Like step 1 is program A standard, step 2 is program B standard, and 3 is C standard.
The problem that you guys will face, because we have seen this, is basically with I don't know whether you follow invoice distribution concept. So you are going to end up in problems if you automate that. Because if invoice distribution comes in, because when the allocations are happening and your allocations is based on the invoice that comes in, you're going to end up in, and their contracts will not flow into B, it will not flow into C. So you will be stuck there.
So we have, okay, so what we have done is we post invoices through automated jobs, and the events is triggered by that invoice job to RAR jobs. So it follows in sequence.
No. It's not that. Invoice will come through. But the problem is when the B happens, when their liability and detriment, at that point, before that, when the A runs, is that point when your revenue is detriment. At that time, there is an invoice distribution concept within RAR. If your invoice distribution fails, you will not be able to get into B and C. The contracts are going to fail that.
So I think what he is trying to say is that the concept of invoice distribution that comes into the play when your assets or liability are in one POB, but it has to be distributed in other POBs where revenues are not still recognized, right? So probably that is the issue you are trying to mention, right? We are implementing in one of the client and we are trying to automate that. I will check whether we have that issue or not.
Yeah, because you are going to get that if you have the situation what he mentioned. And
so first, I think, yeah, go ahead.
Yeah. So the solution for that is, I think we worked with SAP. So this happens during program A primarily, right? This thing called invoice distribution error. So we primarily worked with SAP and we got a utility program. I think it's only relevant for migrated orders. That may be.
It comes
because we haven't seen.
Have you done migration?
We did a spreadsheet upload. We didn't do migration as such.
The real question should be, are you doing the invoice distribution or not? Because invoice distribution may not be relevant for all the clients. Specifically, if you are calculating contract assets and liability at the contract level, then this invoice distribution does not come into the play, right? So you have a setting in configuration. Do you want to calculate asset and liability at POV level? If you do, Then okay, so you are in contract, so that is not applicable for you.
Okay.
Yeah, so if I could pick up this topic, this whole topic of invoice distribution only exists because some companies wanted to do something which actually the accounting standards don't even foresee. Namely, if you read the accounting standards very carefully, they will tell you to calculate the contract assets and liabilities at a contract level. And that is what RAR is primarily designed for, and it's going to work wonderfully in all scenarios that you might have. Over time, customers have come around the corner stating, I want to calculate my balance sheet at a POB level. Again, they are at this point already going against the standard. SAP standard development was so nice to start going into this direction and helping customers do this. But we need to understand that this is something which is conceptually not really thought through. Nobody is supposed to be building a balance sheet at the POB level. So SAP went a couple of steps to enable this, for example, with the invoice distribution functionality. But when you take and you decide to go down such a path, be prepared that as soon as you stack up the complexity, you're going to run into severe problems. And that's exactly what's happening if you layer in something like a foreign currency transaction or very complex contract modification situations. Whatever you do in stacking up the complexity, I guarantee you that at some point it's not going to work, right? And we call these the rat holes. If you start going down one of these rat holes, be prepared to be stuck somewhere.
I will not much time because I want to give the time to the folks who are from the client. But I can say one thing, with the invoice distribution, although it may create the problem, you do have a control. You have an enhancement where you can redistribute your assets and liability, right? So you do have so it's not like you have a problem. SAP has given you the control to control that problem. That is one. Secondly, in one of the clients, we have gone to calculate asset and liability at the contract level, and that is what mandates ASC 606. But remember, if you go to that level, it creates another problem, which is a management reporting. As a management, I would like to see what is my assets and liability at the POV level, right? Because I would like to track whether I'm hardware, software, services, or maintenance. So that will create a gigantic challenge when you try to decipher the asset and liability at the contract level to the POV level. So I think whatever decision is made, as long as pros and cons are understood, it is okay. But everything has some ramification.
Maybe one last question, especially to SAP. So we did work with COE, SAP COE folks like Roshni and others. So we went with this POB level determination. Now, can we switch in the middle to a contract level?
That's a bigger question. So the question is there a switch to go from a POB level balance sheet calculation back to the contract level balance sheet calculation? No, it's not. So this is a configuration decision which you take in the very, very, very early days of your implementation on the whiteboard and with Excel sheets. Once you've taken that decision and you've built your entire design on this is a foundation. They're going to build a 50-story building on this foundation. And if you go live and you have real contracts in there and your program B starts calculating your balance sheet position, there's no way if you can flip the switch and be prepared for something nasty, but there's no way you're ever going to change this. This is in and itself a significant design change, and it's pretty much a migration project. So these are careful decisions that you have to take in the early days, and you have to be aware of all consequences. So again, if your ultimate goal is to manage very heavy contracts, which I happen to know that you have very complex contract combination situations. You do things in foreign currencies, you do things maybe even in multi currencies. you have cross-company contracts, you know, you name it, you have it. If this is what you want to do, you have to keep your implementation as clean as possible. And you will want to walk the main road. You have decided at some point to go one of these side roads, and there you go.
Any other questions?
So you guys are still in FP3, right? So how are you dealing with in-flight? Because that's one of the biggest problems in FP3, that in-flight check errors comes in. And
we implemented around 150 notes after we went live. So okay. we are pretty much there.
So we implemented over close to 200 nodes on FP3, and then we upgraded to FP7, and we identified that we are like 1/4 of the way through to FP7 by implementing all those nodes manually.
Okay, so we have plans to upgrade to FP10. So we are already testing that.
One in there. So anyway, the question in the chat was, what was the total duration of the go live?
The duration of the go live. Oh, sorry, yeah. Our whole timeline was about a year, from engaging Brahmasol, about half a year that got us to get ready to build, roughly, maybe a little less, and then about another half year to build and test and go live.
And then did you go live with releasing that, or was that
Weekend. Oh, really small. Yeah, I mean, yeah, way under. Yeah. We were purely hardware, you know, up until several years ago, and obviously we have more software and service streams now. But it was practically zero, like before we started implementation. It was single-digit $1 million range, tiny at the time. It's grown a lot since then.
You're asking about the migration. That's the other thing. How long does it take to migrate data from So we did not do migration as such.
We did not do migration as such. We did a Excel upload. So that was done after go live, as long as it was in the first period.
What caused one of the questions people ask? What were the factors that went into
So business already had the calculation on the spreadsheet, and what we heard was the migration has some reconciliation issues. So at that point in time, we decided we go with Excel upload.
The other chat will be later at the end.
So we did not have SD revenue recognition before we went live with RAR. So our business was maintaining the amortization spread on an Excel spreadsheet. So that was one reason why migration was not relevant to us. So we had that spreadsheet directly go into SAP RAR via the Excel spreadsheet upload. And during go live, we had few business scenarios which were multi-element relevant, for which we had to create new item categories on the auto management side to make them RAR relevant rather than our hardware business. So the moment we switched the item categories on the sales order to the RAR relevant ones, they were part of RAR. So we didn't have to do any kind of migration or transition during the go live. Yes. And probably about a quarter back, we turned off 605.
That's perfect lead in, because our next discussion is going to be my friends and colleagues, Steve Stone and Shekhar, who are going to talk about migration. Brandon, thank you.
Yeah.
Still out.
Cool.
So good morning. I'm Steve Stone. I'm the Director of Professional Services at Brahmasol. And Shekhar, one of our managing consultants. You're probably more familiar with him than myself, unless you had challenges on your account. I'm going to go ahead and step right in. So a lot of the themes that we're hearing this morning, the touch points and observations that we heard in the previous, we're going to come back to on these as well as we look at S4 and where customers are moving to that. And we're going to attempt to share our experiences that we're seeing in the field, challenges that we're seeing at different accounts that both have RAR today and that are contemplating integrating RAR in this step from ECC to S4. Let's go to the next slide. Before we step into that, it's also important as we touch and talk to other accounts that either haven't put RAR in, they're doing spreadsheets or doing some other solution, they're listening to, okay, what is this RAR journey? Well, I think it's just as important to look ahead as it's also to look back at where we came from, because there were a lot of variables that were in play that made migrations, such as we just heard, challenging coming out of the gate. The other piece is where you landed in the timeline. And the fact that we're on FP03 is where Nvidia said, hey, we're here in the timeline, we're here in the evolution of the RAR application, and we're going to freeze things and go forward. In which case, they accepted a certain level of customization. So just from a high level, the foremost point, I think somebody touched upon it in the back, is this is a finance application, a finance change of accounting principles from point A to point B. Accounting principles, not an IT system, not an application, accounting principles. And I had a colleague remind me, accounting principles translated to software. So getting that user community accustomed to that transition, going from 605 to 606 was half the battle because it didn't look right. It wasn't what I expected. It still doesn't look right, Steve. I'm still not comfortable with this. That was one of the major changes. And then areas that weren't addressed by early RAR and may not still be addressed by RAR. Those were other challenges around feature that made migrations complex. The secondary piece was SD customizations. We had deadlines to get RAR in. We had limited budgets to do RAR, and we didn't want to go back and touch ECC or fix ECC. So a lot of accommodations happened in RAR that we had to customize around sins of the past, so to say. Not to say that customizations are wrong. We didn't have time to wipe the slate clean, go back to the drawing board and fix it to work most effectively with RAR. And again, it was RAR at that point in time. Functionality available, what was there, and what we could design around based upon the business requirements. So that was another complexity that we had to account for depending upon where you were in the RAR evolution. The other piece was the quick ramp of RAR. We heard notes being applied. That was also an area that I'm glad is far in the past now, and we're getting more to feature packs. So now the push to get clients up to speed, but if you aren't familiar with this journey and you're looking back now that you're contemplating S4, it can be, to hear the early challenges can be somewhat daunting for new clients considering this. This is an area that thankfully we've moved out of. SAP has progressed out of, but now that we've moved out of it, I think just as Nvidia has, we're on FP03, okay, how do we step forward and remove some of the customizations that now SAP accommodates through functionality? So that's kind of cleaning up everything behind us before we even consider the step from one platform to the next. So in planning, and I think many of you are aware of this, many consultants in the room, but basically stepping through, one of the biggest, I think Joe asked me this morning or someone else asked me this, what is the biggest challenge you're seeing? And it really is the business case. This is not a platform jump. It's not an IT piece. It is a business transformation opportunity. So if you're not looking at it from that angle early on with a whole host of stakeholders, which is also a challenge, and really looking at the processes, looking at what you're going to change and stepping through some of these high-level design principles or program development as you're going through this or program design, your migration is probably not going to start off on a good foothold. The other piece that we're looking at is data. Well, for us, data is a result of process variations, process consistency, controls, proper controls in place. These all generate the outcome of poor data quality or uncontrolled data quality, which will, in the long term, affect your migration, whether in ECC or in S4. The other piece is to get this early on up front. We have folks that are saying, well, I want to do my migration next year, but when I ask, okay, when are you going to start your data program? We're going to do it at the same time. Well, no, use the runway that you have ahead of you. And that's another area that you'll hear Shaker talk about here shortly. The last piece is really to review 606. If you were on ECC, there was a deadline, you made trade-offs, really come back and look at the end-to-end system and how you're approaching your design from order management all the way through RAR, from revenue recognition and into postings and into reporting. What is critical for both accounting, reporting, and also management reporting as you go forward. Okay.
So we'll talk about few approaches here, so few business cases while converting the data from ECC to S4 in RAR data, particularly RAR data. Actually, this decision mainly, these are just the suggestions or our proposed approach. I mean, it's not final solutioning for any of the clients. This is based on whatever we are discussing with our existing clients and what approach we have followed there. Based on that, we are proposing this. So it may change case to case depending on what data we have available in our system and what data we want to see in our target system, in the S4 system. So based on that, we can decide. So if you see, these are basically 5 business cases. First case talks about migrating the operational documents to S4 system, like sales orders, billing, and other operational documents which are relevant. And then from that data, you utilize that data to create our feed for RAR. I mean, if we see scenario first and second, both of them talks about bringing all the operational details to the S4 system for the in-flight contracts, basically, or in-flight orders. So in first case, it will be a pre-configured RAR relevancy, so that whenever we'll create these documents, it will straight away create the feed for RAR. Like, for example, RAIs, right, which are needed to create RAR data. And then we can establish our contracts or deferred balance or unbilled balances for the POBs. In second case, it will not be pre-activated, but we will follow the SAP standard migration approach of once we bring the operational documents, we'll use the operational load to create the RAIs and then use initial load to process the data through migration process. This, yeah. So in both the cases, they will have to do the migration, proper RAR migration, so that we can establish the contracts and balance sheet positions. In scenario 3, we can use the standard SAP tools to convert the sales orders, means operational documents, from ECC to S4 platform, and then we can bring over that data to RAIs, basically to create RAIs, and then follow the migration approach again. Because so these 3 scenarios talks about bringing all the operational details, and we will have the visibility of all allocations and total transaction price of the contracts. The next 2 scenario talks about just bringing the deferred balance or balance sheet positions. Here, we are not talking about bringing the sales orders or the billing documents which are exist in ECC system for those in-flight contracts. So we'll just determine what is the balance for deferred, and we'll create the performance obligations, and through amortizations, it will just amortize based on whatever remaining revenue to be recognized for that POB in ECC system, and will continue that recognition in S4 system. So that's what these last 2 options talked about.
Okay, so in this options, you are giving ECC to S4.
That's correct.
So what about RAR already implemented on ECC and then moving the RAR into S4?
These options can be used in both the cases, whether you have implemented RAR on ECC or whether you have not implemented RAR on ECC.
Then when your balance sheet position gets reinstated, your balance sheet is already reinstated in RAR. So if we are going to bring in the data from ECC directly into RAR with all the allocations happening in RAR, how will you be able to reinstate the correct financial positions on S4 side?
Yeah, since we are bringing the contracts, these operational documents with full amounts here, we expect that my positions would be same in ECC versus in S4, because you will have to in first, second, and third case you'll have to update the legacy tables also, right, with the historical recognized revenue and your basically allocation amounts, right? So that will make sure that your whole contract position is same as what is there in ECC as of today.
So then what you are saying is that what we did from ECC to RAR, we have to do it again with ECC to S4.
That's correct.
And here you are talking more on the SD part of it. But what about hybrids or and project systems?
Yeah, this is mainly describe the scenarios for SD. That's correct. For hybrids and project systems, we'll have to little brainstorm and think or similar strategies actually, because see, this operational documents is a source, right? We know the migration. We have the migration tools available provided by SAP, right? Similar to that, it depends on how we are migrating the hybrids data and other tools, right? And based on that, we'll have to decide what migration approach we have to follow and how we can establish the contract positions in S4. So that again, that reconciliation will play major. Means that's why we talk about POC and all. So, I know there will be many questions on this. So if we talk about this approach,
so we are already on RAR 1.3 FP7, beginning from which it is HANA S4 compatible. So the question is, so it will be, we were thinking it will be more of a data migration, more like an upgrade rather than consider it as a full-fledged migration. There is a migration involved for the ECC, but the RAR component will be similar to the ECC.
So it's not a table move. It's not a part table move, right?
Yeah, it's not a general upgrade kind of approach, right? We have to have maybe greenfield implementation for the client, or whatever Shekhar is saying is more like a transition approach we have to adapt. Again, we are trying to use here SLT tools like Excel upload programs, whatever SAP providing. Legacy tables are getting updated, but it's not a standard straightforward approach we have here.
Yeah, that's correct. Exactly, that's my point is, because see, when we implement S4, normally we talks about stick to standard and avoid customization. So we talks about improving our processes and removing the gaps whatever we had in ACC. With all those changes, I'm not sure when it will be challenging to just do table to table migration from ECC to S4.
Again, there's one more scenario also, Shekhar, we need to consider. People, customers who are already in S4 HANA in 1503 earlier versions, like only finance S4 HANA version, right? So what they have to do, the other customers, like not ECC equivalent customers. So those also we need to consider the options wise, what is the design for them, right? What are the options they have? Because SAP standard right now for a S4 HANA migration, there's no migration cockpit available right now.
Exactly.
I know Martin provided, but those are standard approach what we have.
Yes.
Yeah. Hey, just one question. So this is Srinivasan from ServiceNow. Actually, we started implementing 1809, and we are already in 1503 right now. And what we heard from SAP is all those existing RAR tables, it exists, right? And we are going to have all those POBs and the balance sheet information already available in RAR tables right now. So when we are going live with any future upgrades, it's just an upgrade. Is there like any migration involved from 1503 to 1809? Because like what I'm hearing from everyone here is like it's not a straightforward upgrade, right? Like we are going to do some migration from 1503 to 1809 by moving some table information, but that is not what information I got from SAP before. So is that a true statement?
Yeah, actually, from 1509 to 1809, I'm not sure whether it's just a technical upgrade or as against what approach we are talking here about is about ECC to S4, right? So, actually, in fact, I am not aware.
So again, this is 1503 is any more version is finance application S4HANA landscape, right? It's not S4HANA with RAR landscape. So there's a differentiation, right? It's an S4HANA finance is nothing but ECC land tables backend. RAR tables are more like ECC relevant tables. So we cannot directly migrate into S4HANA tables which have all.
Exactly. Are you just doing technical upgrade there?
I mean, they're considering into 1809, yeah.
Yeah. So
it's like only the business partner approach is going to be different on the future things. But from the RAR perspective, like when we are in 1.3 with SP6, it's going to be the same functionality in S4 as well.
So see, functionality is same, tables will be same in ECC versus S4. It's mainly why we are discussing this approach is mainly because of change processes, improved processes, whether you want to modify your business process and whether you are doing just technical upgrade versus improvement in the processes also, right? If you are just doing technical upgrade, yes, I mean, you need not have to do migration, right? Whole data will be available in the same system.
Exactly.
Right?
So this is like what you're saying is like if you have not implemented RAR and if you are going with ECC to S4 directly, then all this migration approach are applicable, right?
Yes.
But if you're already in RAR with 1.3 or FP, whatever it is right now, right? And if you're going with the S4 options with 1809 or 1909 or future upgrades, then probably there is no migration involved from the existing RAR tables to S4. That is what my thing, right?
So even my understanding is same. So
exactly. Okay. So only there are changes in the business partner approach, and apart from that, like no functionality changes from RAR perspective.
Correct. That's correct.
Right.
So there will not be any functionality change.
Only thing is we need to consider the enhancements what we did in part of RAR 1.3.
Yes.
Because there's some standard solution not available. Customers did enhancements on top of standard solution, which they need to consider.
As we are talking, right, every feature pack or support pack is adding some functionality and improving the solution, right? So, for example, in your case, you might have done enhancements for call of order, which is standard solution now. So you may want to just remove those customizations. So that kind of modifications you can do.
Yeah, I understand from the new S4 perspective, we are introducing release orders, which is like call of order functionality. But the thing is like even with the call of order functionality, you have billing upfront scenarios and billing based on call of orders. Right now, SAP is coming up with only billing upfront scenarios.
Yeah, that's correct.
Not for billing based on call of
actually, that was just an example. I'm not solutioning here. I'm just giving examples.
Got it.
I think we need some clear-cut direction. A lot of customers may have some questions on RAR 1.3. They want to go to S4 and upgrade. What is the roadmap, right? What is the approach they have to take in terms of migration? I mean, what you're proposing is
starting point from us also, and we are doing a few projects, and based on that experience, we are just proposing these approaches. I mean, can we go to next slide? Yes. So, how we came up with those scenarios? We are already pursuing a couple of options out of those, actually, option 2 and option 4, basically for our few of our clients. That's why. So, what we suggest is, as we discussed, right, customization of SD processes will have to be adapted because we utilize that time we do not know what solution was available, what functionality was available, and what customizations we might have done. So now there may be standard solutions. So before migrating to S4, just streamline our solutions actually, so that we will have clean implementation in S4, clean data in S4, and then we can avoid the unnecessary customizations. We can stick to standard solution. Then RAI and POB definition logic may change because of our improvement in the processes, maybe business process. If we are modifying some order management processes, that may change our POB definition logic, or as Mike suggested in morning, that this is accounting solution, so that may also help to redefine our POB definition logic. And we also need to adapt, because of these changes, whatever we will be doing, we need to adapt our reporting, right? So we need to take care of those changes also while moving to S4. Go back one more time.
My understanding is that the option 2, or no, it was 3. Isn't that landscape transformation recommended here from SAP, or no?
Option
3.
2 or 3?
3, SLT.
SLT, right? So this is one of the tools SAP provides, but there may be other tools also to convert the data from ECC to S4 for operational documents. Right? That's what we are talking about. So basically, this option talks about table-to-table data copy for operational documents. Like
right.
VBA, AK, VBA, AP tables, and all
other tables. For example, your billing history, your deferred revenue schedule,
yes.
right?
Yes.
But in scenario 2, you're generating
it's not deferred revenue schedule, because this here we talk about converting the data only for SD side. RAR data in 1, 2, 3 option for RAR we have to do the migration and generate the RAIs. Okay, so that we can establish the contract position in S4 system. Treat last day of our if you see the first option, last period date before go live, we'll have to do the migration as of that date, so that we can establish the correct position of the contract or POBs in the S4 system.
So in every scenario, you're generating billing or generating RAR contract combination
that's what we are
in the target system.
Yep.
Oh. So now, of these 5, which would you recommend the strongest, and how's your experience been? I guess you're
actually
2 and 4.
I cannot say that use this solution or use that solution. It depends on all the stakeholders' decision, what data we want to see, what data quality we have available in our system, and how much effort we want to put in. So it really depends on all those factors, right? Just a second.
We have some other requirements, like we need to have 8 years, or at least 8 years or 5 years of financial data in the system, looking back into the past 8 years. In that case, how can we not bring in some of the data? Keep 8 years of
financial data, right? Do you want to keep these RAR subledger also in the system, or how you are planning to migrate your financial data to S4 system? Are you bringing 8 years, 10 years data? Yeah, I mean, all those decisions will decide what approach you want to follow and how much data you want to bring in.
Shekhar, on SLT, I have used it in the central finance. It seems to be a complex tool where you have to install on ECC and other servers. Is there any client who has used SLT for RAR migration?
Actually, we forgot to put one bracket there, SLT or similar tools. So you can use any tool where you can copy the table-to-table level information. So it's really up to the IT team what approach they want to follow, right?
item. The other Pete and I will work on putting together some follow-up discussion on the migration. Shagar, why not?
Yeah. Good. Yeah. Sorry? Yeah.
Yeah, and I'm going to say that, I'm just going to comment real quick because, the fellows over here and I just were at the Central Finance event. And a theme that came out, no matter what customer, whether it was Verizon, Google, anybody else, the theme was, when you think about S4 and you think about an S4 migration, I'm going to simplify things. There are two major buckets. Major bucket number one is the people who choose just to do technical upgrades. And you're going to have to shift and lift all, there's a reason why they call brownfield brown, right? You're going to have to shift and lift all your stuff from one place to another, and you're really not up. For those people who choose to do a business process redesign and really do finance transformation, the issue and challenge you face from a data migration, and the other perspective is you're changing business processes, but you're taking advantage of you're still changing business processes. So these 5 different approaches are designed to help you think about the trade-offs that you have to make. And what we'll do is set up a workshop and talk about, we'll bring in Joe's team and everybody else and talk about what are those trade-offs and what are some of the issues and challenges you face as a community, and talk through and help you think about them. There's 5 scenarios up here that we came up with. There's probably 7 scenarios. There are probably, I'm looking back here myself, there's probably 5, 6, 7 key drivers to these decisions and what to decide. So we'll make a commitment to the team to kind of bring us back to that spot, because we could probably talk about this all day.
Yeah.
So I just want to hit before we get to these 4. So Brandon brought up another one, which you better be thinking about, is working with your business on the migration for the reconciliation, because that's another major challenge, especially where we were taking from an ECC, basically central finance, without operational data back to a transactional system, back to your eventual S4. So make sure your business is aware, make sure you have those reports already ironed out up front and not doing it while you're doing your migration, because you get a nice tailspin there chasing yourself. But taking away from here, basically we're recommending for ECC RAR customers that they upgrade from earlier versions, remove customization, because again, you're trying to simplify this. You're trying to make it easier as you move forward, and starting off, as Mike said, on a strong foundation in your S4 practice. In terms of looking at the solution end to end, so one of the other challenges that we see is there's many consultancies that are out there. Each one has their specialties. So as program design for clients, you do this, you do this, you do this. And although we work well together and integrated, we don't always think in an end-to-end manner. So really take a step back, look at end-to-end on your processes and make sure that they work. Make sure that they not only work from the application standpoint, but also for your end user, the finance team, as you put that together. The other piece looking forward, and you heard about it this morning, they touched on, and we're anxious to see where this is going to go, is the optimized version versus classic contract management, and what that's going to mean for clients and potentially mean for both your design for S4, your designs in S4 RAR or revenue recognition, but also, what are the trade-offs between that and what fits for each industry as we look at each industry across. Okay, thank you.
Yes. So welcome everyone to this session. I think all of you got a very good extended break and you must be now fully energized to go through the session. I will need all your attention for this because it's a totally new concept that we are going to introduce to you. We are going to cover on behalf of SAP Consulting, we are going to introduce to you the topic of two-dimensional performance obligation in RAR. And we are going to do that using the multi-phase cloud deal example. Because cloud companies are the new, most of the customers would be having this subscription model. So we wanted to cover that specifically. The structure of our presentation goes like this. We will first talk about revenue recognition and how it will be a slightly different for cloud subscriptions. We will cover the detailed scenario that we have prototyped for you. We will cover different performance obligation types in RAR. And then we will also cover the SAP consulting approach to the designing of the solution. And lastly, we will cover the demo of the prototype that we have made. Okay. Okay, yes, that's fine. So what I'll try to do is cover through these topics that we have and the demo in around 45 to 55 minutes, and then we'll be open for question and answers. So if you have any questions, please try to keep them with you. Just note them down, unless they are preventing you from understanding the demo. So as all of you would already know, IFRS 15 and ASC 606 give out the 5-step model to recognize the revenue, right? So this 5-step model starts with identifying the contract for the customer. And the second thing that we have to do, which is to identify the performance obligations in your contract. The performance obligations in terms of what are they? They are the distinct goods or services that you have promised to the customer as part of the contract. So these, in turn, in RAR context, they will be displayed in terms of the performance obligation. It can be multiple distinct performance obligations, or it could be one single performance obligation. So what the accounting standards say is that you can have multiple distinct service or products which would be displayed as a multiple distinct performance obligations in your contract, or you could have a single POB representing your distinct services or goods. So this is where your concept of series comes into picture. So as per the accounting standard, there is a series. Series would mean you have distinct goods or services which are substantially the same. That means for each increment, basically, you are having the same kind of service, same kind of goods, absolutely similar in nature. And they have the same fulfillment pattern. So this is for the overtime performance obligation, right? So this is a scenario where you would normally use a single POB. And a good example for this is the stand-ready obligations that the software companies use. These obligations are where, we say, the company says that, we are going to keep on working on new patches or new bugs fixes, and they will be made available to the customer at a certain cost. So you sign a maintenance deal. These things are ready for the customer to use as and when they want. And as and when it is something is identified, it is made ready for the customer. These are the stand-ready obligations that that are catered as part of a single POB as a series. The other example is that of a single performance obligation with non-distinct goods or services. This is where the multi-phase cloud deal comes in. And by multi-phase cloud deal, what we mean is that at the inception of the contract itself, we say that the number of users would be different across different months. So you have out here, you have two things coming in. One is that it's an overtime performance obligation, so you have a time, and the other thing you have is a number of users which is non-constant. This is a scenario for which we can use a single POB. So once we have identified the number of POBs in the contract, the next step is to see the transaction price, to determine the transaction price, which in turn can be fixed or it can be variable. After transaction price, we have to do the step 4, which is allocate the transaction price amongst all the POBs in the contract based on the standalone selling prices. And the step 5 says recognize the revenue as the POB gets fulfilled, as you satisfy the performance obligation. Now this recognition of POB again it can be ratable, same straight line method over the periods, or it can be non-ratable, it can be as control transfers. Okay? So these are the criteria which actually determine how you recognize the revenue using ASC 606 or IFRS 15. Apart from that, what we do need to cover is the contract cost, and we need to cover disclosures. So for example, in case of time-based POB, we need to ensure that the revenue status is available in all the months, all the time. That is a required kind of a disclosure need, but if you are using a practical expedient, you may not really need it. So this is, and then third point is you need to have the balance sheet presentation. It should show the correct value of contract asset, contract liability at any point. So for our scenario that we have prototyped for the demo today, we are going to cover the multi-phase cloud scenario. So this is a single performance obligation using non-distinct goods or services. We are using a fixed transaction price. We are using a non-ratable revenue recognition because it has control transfers. You will see different amount of revenue being recognized. And finally, we will also show you that the disclosure needs are met perfectly. And of course, the contract asset, contract liability is correctly displayed. So now we are going to talk about our scenario. So it is a multi-phase contract, which is spanning 6 months. So at the beginning, the customer is telling, in our case, company C, that I want to sign a 6-month contract where for the first 2 months, I will have only 10,000 users each. And for the next 4 months, I'm going to use 13,000 users each. The transaction price would be fixed $5 per user per month. And they want to do bi-monthly billing in advance. So our contract price is $360,000 at the time of contract inception. So here, what you need to pay attention to is that we have picked up 2 complex scenarios here. The first one is we are trying to do multi-phase cloud deal using a single performance obligation. That is one level of complexity. And the second level of complexity is something we will introduce when we do a modification, mid-month, day-based modification later on in the month. Okay? So at the time of inception, our transaction price for the contract is $360,000 in total. And at that point in time, company C looks at this whole scenario and they determine that this particular contract has to be represented using a single POB. And it is not exactly a series, it is ratable because it is based on day-based, right? So here you have 2-dimension POBs coming in. The first dimension is the number of users, which is your quantity. And the second dimension is the day-based valuation. So you see here, we have shown you the revenue spread which happens when you have number of users, which is changing over the month, and the number of days which is changing, and you have this kind of a revenue spread. Okay, so this is at the time of creation of the contract. Later on, after 3 months, in the month of September, mid-month on 18th, we say that we are going to do a contract modification. There are 3,000 additional users, 2,000 additional users that come in at the rate of $3, discounted rate of $3 per user per month. So this leads to a contract modification, and on top of it, company also offers them free professional service for 2 months. This is a day-based service. Okay, so with this POB, this is a single dimension POB which will come in. So we have a contract modification. It will impact the total revenue spread that you see. And so as you see here, what you have is in the initial phase, you have a single POB which is 2-dimensional. And in the modification, you have two POBs. You have one two-dimensional POB, and the second POB is a single-dimensional POB. Both of them have day-based calculations. So what you will see as a part of a demo is that the contract modification that happens is showing the same results. The treatment is the same. RAR gives both two-dimension and single-dimension POB the same treatment. So this slide would actually familiarize you more with the contract. So what you see, the first section is the contract as we created. The last section that you see is the final position after the contract modification. And in between, what you're seeing is what changes we are making. So as you can see here, we have a uniform transaction price of $5 per month at inception. We have a total number of users, which is 10,000 for June and July. And from August until November, it is 13,000 per month. The revenue, basically the price, the transaction price, as a result is 50,000 each for June and July. And we are going to do a billing in advance. So in the month of June, we'll do 100,000 billing. Similarly, August, September, you see here the number of users is 13,000. So your billing is different amount, 65. Basically, it will be 130,000 for 2 months. And then in October, again, we have to do a billing. This is what we plan at the beginning of the contract. Then what happens is on 18th September, we have 2,000 new users coming in at the rate of $3 per unit per person, which causes an increase in the billing for the month of September and of course in the month of October and November. So you see the final position here. Our June and July remains unchanged at 100,000. August also remains the same at 130,000. But in September, we get 2,600 which has to be invoiced. And in October and November, October month, we have a different increased amount which has to be invoiced. So the next slide, we are touching base a little bit on how exactly do you derive the user days, because that is the key. Our two dimension is based on user days. Okay? So you have the number of days in the month out here, and you also know the number of days in the for a particular month for the users. So what we did was we first calculated the initial user days, which is nothing else but the user days multiplied by number of days in the month. A key point that I would like to draw your attention to is that for the month of September, we have split it into two halves, right? The first set is for the first 17 days, and the next set is for the days from 18th, 13 days from 18th until end of the month. Okay? And so we have split the user days also accordingly. What you see as modified is this position after the contract modification. And out here you see the revenue spread. So after the modification, our total value is 374,600, and initially it was 360,000, and the number of user days was 2,196,000, and later on it is 2,344,000. We will be going through this in detail later on. Also, we have an Excel that we will use to compare. But as of now, if any one of you has any question on this scenario, please let me know. Please.
So how do you handle freemium scenarios in this case? Say, for example, you have a contract for 12 months. First month is free. And in that case, you bill the customer at the end of the month, not in the beginning of the month. So in that case, how do you handle this?
Oh, okay. Actually, the thing is that question is not really related to this specific scenario. So
in terms of revenue, yes, because you essentially are looking for 360 days of subscription, but you bill the customer only for 11 months. 330 days.
Right. So at that point in time, another scenario could be that we could average out the values, but that is again, it would depend on the accountant's view. So we will need to take into consideration the accountant at that point in time. But I think the point you have raised is a very, it's another topic altogether. And maybe for now, let us focus on the two-dimension POVs, and then maybe we can come back to your question later on.
So when you talk about the two-dimensional POVs here, right? So it's kind of like upsell scenario where you have a specific set of users for a specific period with a different price, and then when a customer is increasing the list of users for the future periods, you won't have a separate price. That is your scenario right now, right?
Yes, that is not the initial. So at the time of inception, you have the same rate, but only when you have the modification happening in September, that is when you get the discounted price.
So when you're talking about two-dimensional POBs, right, are you having a different setup in the POB configurations, or how you are thinking that as a two-dimensional POBs here?
That is based on the quantity. So I think I will cover this aspect of it as I go through the demo. Okay. We will touch base on this.
Sure.
Okay, so this is our scenario. Now, the next thing, let us touch quickly on the performance obligation types using RAR. So one of the first performance obligation type that comes to mind is quantity based, which is driven by the event. So you recognize the revenue at a particular point in time, right? This is primarily for all the products, distinct products. So you can say that it is, you can have, for example, you have a sale of 25 identical products. Out here, you can choose whether you want to have 25 distinct POBs, or you want to have one POB with 25 quantity. You can recognize based on goods issue, based on your event, whatever you give. So this is an example of quantity based. Another example which is kind of relevant, you can say it is an example which is a takeoff from the software industry, would be the right to invoice practical experience. This is the quantity based method of output, basically revenue calculation, where we are saying that the company would actually bill the customer a fixed rate based on the number of hours they are spending for that customer. And this is recognized based on invoice. Invoice is the event. So that is where you have this thing, and this is where you can use the quantity-based performance obligation. The next POB type is our value-based performance obligation. Now, as the name suggests, value-based means it's something over time, time-based. It can be a series. You can have a ratable value where it's a straight line method. You are recognizing the same revenue across the month for all the periods. Example for this would be the stand ready obligation, or it could be support service, or any kind of a series which is fulfilled ratably. I would think different variant of this is basically our value based, which is non-ratable. That means your revenue for each month is different. It is basically a percentage of completion way of calculation of revenue. So here you have example of the construction of an asset which is POC based, or you could have service basically which is non-ratable. This is the in our scenario the professional service, the freebie professional service which is offered for 2 months is an example of this particular POB type. Okay? And the last POB type, which is the new POB we are introducing, is the value based with quantity. This is the two-dimensional performance obligation. So this is where our example is the same, multi-phase cloud deal, where the number of users is non-constant, the revenue is non-ratable. Okay. So we are going to use both of these POB types in our demo. So now to touch briefly on the SAP Consulting's approach for designing of the solution. So we treated this POC as a kind of a project. It was a miniature project. We went through all the relevant phases. So, you can compare it with the phases of a project. So in the project, you will first start with requirement gathering. We did that in the scenario definition. So we decided we wanted to make a complex scenario of multi-phase cloud deal using a single POB. And then we wanted to also have day-based revenue recognition and prospective contract modification. And we wanted to show the multi-element approach, the allocation effect. So this is the requirement we decided upfront of the project, POC creation, and then we modeled it on an Excel, because you have a scenario, you need to know what is the accountant's view of that. What should be the result that you should get from RAR? This is where Mike made a very detailed Excel end-to-end for all the 6 months. We have T accounts. So I will show you that Excel as well, but this is where we made the detailed model in Excel. The next thing was system. Where do you want to show it? What is the system you're going to use? That is the point we decided. Because we wanted to show day-based contract modification, we had to use 1909 on-prem. And then the other question came was, what should be a source system? So we analyzed BRIM and SD as a source system. We looked at BRIM in detail. We saw that yes, we can use it, but then it requires certain enhancements. There was some gap. Then we looked at SD, and we found that SD also has its own, it's much better than BRIM, but it also has certain gaps. So given all this, what we decided was.
Hold on, pause. We've got some questions coming through in the chat. So before you jump into the demo, we just want to make sure people understand the scenario. So the first question is this scenario for when the number of users fixed at onset, does it apply when users vary from month to month, like a usage-based scenario? Yeah. Yes? Okay, that's yes.
We're already doing a split between 10,000 and 13,000, so it can even be every month.
Yeah. Okay. Can I chip in here? So the number of users is fixed at the outset. We are not in any kind of usage-based model or variable user or variable price model. So both the transaction price is fixed and the number of users is fixed. But the specialty here is that the users are increasing in a phase. So we have phase 1 with 10,000 users and phase 2 with 13,000 users. This is very typical when customers roll out new software and they gradually increase the use of the software.
Right. That was another question. So can two-dimensional POBs handle scenarios where the number of users per month are not known beforehand, but validated each month? Or maybe they're static at the beginning and then they increase?
Yeah, so that would be a very different scenario, because in that scenario, we would be in a very dynamic world. Here, everything is known up front. And the real challenge we have here, and this is why we really forced the two-dimensional thinking, we have one POB, we have one transaction price, but we have a phase in between. If we go into any other variations...
What does that phase mean then?
The phase means that for the first 2 months, the customer can use up to 10,000 users, and thereafter 13,000 users in the next phase.
So it's a step change?
It's a step change. Predefined. It's user-based. Yeah, seats. The seat is the better word. This is not usage-based, it's user-based.
So it's predefined, preset phases.
Yeah, Mike, we have similar kind of situations on the software side where we have subscriptions and we have downloads. So we have a fixed download for an order. We say, okay, 100 downloads. But the customer would overusage that. He will go beyond 100. So will this two-dimensional POB concept hold good in those kind of scenarios?
No, actually not. Because your scenario sounds to me like a modification scenario. And either you take some kind of an estimate of what's going to ultimately happen over the entire life of the contract, including these over usages. And then in this case, what's going to happen is, because the estimate is typically off of reality, you will go into updates of what's happening.
Treated as a portfolio.
Yeah, that is a very interesting answer from your auditors. again, in order to go into that level of discussion, what we would need to do is we would need to analyze that, the accounting view of it, whatever it is, and break it down into this level of detail that we're showing here. So I would simply recommend, let's make sure everybody understands the scenario at hand in all details, and let's just accept that for a moment. And trust me, this is a realistic scenario. So we made it up based on all the different variations, and we purposely picked the complex one, but this is a realistic one. So let's just, accept that for a moment, and then let Sarabi show you how RAR tackles it. Yeah. And we'll talk about standard functionality versus how much customization is needed. But let's park that just for now before we see the action. Yeah. We ended up doing it in SD because SD was superior to BRIM in its standard shape and form. But for many of you, this is not a question because either you have SD or you have BRIM or you have both or none. We have the luxury because this was just a prototype, so we were able to compare the two, and that's why we know that if you're starting from scratch with SD, you're in a stronger but not perfect position to tackle the scenario. Okay, so I say we move on. Let's look at it in action.
Yeah, the other thing real quick is I captured two more. We talked about migration earlier, follow-ups, and then we'll follow up on this usage-based scenario. It's a different thing.
Yeah, we were discussing the source systems. So in terms of the source systems, like Mike mentioned, we evaluated BRIM, we evaluated SD, we found that SD was better. But that actually made us think that, we wanted to see how RAR would react if you give it certain input data, right? Whether it will give us the correct output. So we decided that we will make a prototype on a source system agnostic model. And that's why we decided to upload files. So flat file upload to create the RISE. And what we did was we used the SD01 and the SD03 flat files to upload the RISE. Okay. So this is where we decided that. Then came the iterative cycle of designing, building, testing. The iterative cycle we designed. So at the initial stage, we designed the end-to-end thing, and again, how exactly we wanted to show this, how exactly would we bring in the quantities, because the user quantities have to be brought in. So we defined on that. That was something continuous. So we decided what exactly we want to do. Then we built and tested it, prototyped it, and we analyzed the results. If the results were not matching, we kind of did the whole cycle again. So for example, when we were designing this originally, we knew upfront that the current deferral methods that we had were catering to the number of days or the periods, right? For this scenario, we wanted user days. So we knew we needed to have a custom table. But where exactly do we want to put in? That was a design decision. So what we did initially was the debugging mode, we went and tried to see where we need to insert the values to get the output we want, whether it is giving the output we want. So we did all this analysis, and based on that, we decided that we need to make a custom table. And what we will do for this, so even in terms of how exactly you want to treat the quantity, how you want to give the user days to the system, to RAR, there also we evaluated 2 or 3 different options. And finally, we chose one option which was best matched for our prototype, but given the time constraints that we had. So we made a custom table which is giving the user days. And so it was a continuous iterative cycle. In between, we found, for example, that when we are doing the contract modification, we are not getting the values we are expecting. We were getting an error. So we thought maybe let us kind of scale down our model, do it single phase, and see if that works. And then ultimately, for example, it was kind of a iterative thing which went on going, and we realized we have to change the system or we have to do some other troubleshooting for it. But finally, we have this model which was working. We have a good custom table, and we have the solution which matches perfectly with the Excel, the accountant's view for this. And for this whole thing, we were working together with the SAP RAR development team. So you can say it was a co-innovation, SAP co-innovation between RAR and the IFRS 15 COE team. So this was the cycle we did, and once we had the results we wanted to get, we checked whether this particular design is scalable, whether it is robust enough. And so this whole cycle for us, it took around 3 weeks for 4 experts, including a technical person, to make this prototype that you see here. But this is for the prototype. For the production ready model, we will need to spend more development effort would be needed for that. So next, before I start off on the scenario demo, I want to show you certain assumptions that we made. The first assumption is that the host system will be sending the number of users per month per billing cycle. The second is that custom deferral method would be used, and for the day-based contract modification, we will use the optimized contract feature of the 1909 on-prem system. Okay. These were some of the assumptions that we took. Okay. Now.
Is that like you have to do some custom on this multi-dimensional POBs, or like is that as a standard it comes with 1909 upgrade?
Custom deferral method is custom enhancement for us.
Okay.
It is something which maybe they are in the roadmap, but as of now, for this particular prototype, we did it custom.
Okay.
So you can say, for this demo perspective, if you're looking at it, a majority of it is standard RAR. It's only the custom deferral part where we did enhancement. So you can say, up to 90 to 95% is standard. Only a small component of that is custom.
Okay. When you're saying new optimized contract management features, right? You cannot use existing contract management, or you want to go with optimized contract management for this scenario?
So for this scenario, we wanted to go because we are showing mid-month day-based contract modification.
So which is there only 1909.
Okay.
Not there.
Thanks.
So now what I can do is maybe I will walk you through the Excel which we used. This will also recap the kind of scenario we had. So these are the areas we already saw: the user day calculation, the revenue calculation, the total picture, initial and the last stage picture. Then we had this value for each month. We had, for example, the remaining units, the units in the month, the fulfillment, the SSP per unit, remaining SSP, the contract revenue recognized for the month, and the cumulative revenue. So we had this value for all the months. And in the month of September, you will see that the number of POBs increased to 2 because the professional services came into picture. This is where we did the contract modification, prospective, and we have October, November. And at the end, what you have is the T accounts. So T accounts are showing a receivable, contract asset, contract liability position, as well as the revenue position. We will use this Excel for the purpose of our comparison during our demo. So before we do there, let me just go back to this section. So I wanted to show you this flat file upload of RISE. So what I have done is, to save time, I've already uploaded the RISE in the system, and I have exempted them. So because I don't want to process all the RISE together, I have exempted them. But as you can see, I have created the RISE for SD01 and SD03. For SD01, you have one for the sales order creation, and then you have another one for the contract modification, and then you have SD03 for the planning indicators, as well as the invoice. So the Excel source, yeah.
Just asked to see the upload file itself. So this, yeah, okay.
So I will start processing. So this is the sales order creation. The second part, what will happen is what we are expecting. So as you know, when you are creating a sales order, if you have a billing plan, it will automatically create the SDPI rise as well. It will create SD01 and SDPI, the billing plan related item. So what I will do is I process the sales order rise. Now I will process the planning item rise. Because in our, what we expect is that the planning rise are one of the ways in which we can send the quantity. There are different ways. It will depend on each and every customer. For the purpose of the POB, the planning item is what can send the values. So let us take a look at our contract. We see we have total correct value 360,000. The effective quantity also looks correct, 2196. Let us look at the revenue schedule. Okay. So we have a good distribution, revenue distribution. Let me go to the minimization of this so that it can be used for comparison. What we need to compare is this initial user days and this total revenue before contract modification. So you have the total values. You can see the effective quantity is the total quantity. This quantity is the user days. Okay. And you have the revenue spread. For example, in the month of September, we are expecting a value of 63934.43. We have the same value here. So you can see the values are matching to the penny here. We have got the exact revenue distribution the way we want it. So the next step, what is there for us is, what I will do is, I will use this particular slide as a kind of a control for us to see that we are going through all the relevant steps. So the next step for us is to do the billing. So I will do the invoice. I have selected my invoice here. This will, in a normal SD system, we have to create the invoice and it will flow here. Here I am using restore as the purpose, serving the purpose. And I do this and I process this. And when you see this invoice as processed, what you will see in the revenues contract is that we will see the invoiced quantity as well as the invoiced amount. So this is kind of tracking also. How much have we invoiced? Okay. So you have all the values you want. Then as a normal month and close activity, what we need to do is we have to transfer the revenue. We have to do the calculate contract liability and do the program C. So I will do that. So I have my transfer revenue program. So I will execute this. This is for the month of June because June is our starting month. So one contract has been processed. The next thing I have to do is I have to process the contract liability. You mean the revenue contract? This is not an SC. This time.
Yes, so all of you are right. It is both time-based and quantity-based. It's two-dimensional, time and quantity. And this is actually the magic here, that RAR is able to absorb that and present that correctly, that revenue will increase commensurate with the user increase. And we have it in the schedule, which means we can generate our disclosures. So this is really the evidence for a two-dimensional POB, because it considers time and quantity in combination.
But in this way, is the time, is it really dated like an SD contract, or is it really manifested in the quantity itself as a separate line per month?
Yeah.
I guess that's what I'm seeing is
so
six POBs, one per month.
It's a matrix. Yeah. It's a matrix which considers actually days and quantities. And we will show the table later on, the table that we needed to pull in, but it's fundamentally a two-dimensional thing, days and user count.
That's our confusion. Well, there is no sales order, I guess, effectively, right? Yeah, exactly. Well, you do need dates, right, to have the waterfall correctly, right? So I assume each of these POBs has some concept of a date, right? Well, sort of. Yeah. But this is what we're getting used to, and that's why you're telling me calm down.
We'll show you the custom piece of it, which was necessary. It's very minor. There was just a very minor piece that was needed because RAR already has fundamentally everything. We have the days, we have the start and end date with that. RAR even today is smart enough to do very different ways of counting the days. We've selected a real day-based one, and RAR just needs a little bridge to bring the quantities and the days together. But we'll show you that once we get through. And just to one more comment. So we are using flat file uploads, yes, but they are exactly in the structure as if we would have an SD in front of it. So this is just because we're in a live mode. We could be using SD as well. That would just take longer.
Configure SD probably variants or whatever. Yeah, I get it.
Yeah.
Too much for it.
Yeah. Okay, so let's get moving. Keep moving, Sarabi, so that we see the.
That's our world. We work at software companies, so we're used to configuring the SD side of this, right? And it's blowing us away. That's why we're having these questions.
Yeah. So maybe I'll just show you. So for example, your user days. This is the matrix that Mike referred to. So this is where you have. This is available as part of your deferral method 1. The number of days in each month. This is available as part of deferral method 1. And once you have the number of users, we can derive the number of user days. So, and this is used in the custom deferral method. So for our instance, for our purpose of prototype, what we did was we made a custom deferral method. We have the number of days in the period, and we had the user days, and we used this. Okay. It can be, you can have two quantities. So and one of the options that we suggested, we thought of was we were having the quantity coming in. We are recognizing the quantity and number of days is already there in the system, and it will automatically calculate. That is also working fine. But for this demo, we chose this particular option. So this is how it is basically doing it. And now let me just draw your attention back to the comparison with the contract asset, contract liability. And for the first month, as you know, we are expecting a contract liability position because we have already built in advance, right? So whatever is the amount remaining for the month of July is something which will appear as a contract liability, and you see it is appearing here. You can see our invoice correction shows the correct amount of what we have invoiced, and the revenue shows the posting category shows us the amount which has been recognized. Okay. So this is what has happened in the month of June. The next thing what we have to do is we go back and we see the month of July. What do we need to do in the month of July? There's nothing to be done, no invoicing, no RAR processing. We just need to close the month and basically run the program A, B, and C. So for the purpose of our demo, I am not running program C and I'm not closing the periods because That is something which it will take up time, and we don't really need to see those values. So I run the program for transfer revenue for July. And next, what we do is we run the contract liability for July. And then once this is done, we will go and see the value in FARDI posting table. So I think we are expecting 0 position for this because whatever has been billed in advance, we have already provided the service for it. Now go to the FARDI posting table. And our value becomes, contract liability position becomes 0. We have the same amount for the invoice as well as the revenue. So the next thing which is available for us is now we go back here and we are in the month August. So in August, we have to again process the rise for the billing. And I go back to my system here and I select my RAI for the month of August and process it. Okay, come back to our revenue schedule, and what we are going to see here is the invoice quantity and the invoice amount. It is not really impacting our revenue schedule is the same, the way it should be. And so what is left for us is to again do the program A and the program B. So we can see the contract liability position. So we have this value, and if we compare it with the Excel, we will find that this matches perfectly. 63934.43. So we have an exact match for all the three. So balance sheet and the P&L, both of them are exactly what we expect. So what we have done now is covered the part 1 of our complex scenario, which was a multi-phase portion. Now we will, in the month of September, we'll go through the additional complexity, day-based contract modification, mid-month in September. Okay. Yeah.
So for since like there are, I'm just assuming or visualizing the SD document how it will look like, right? So one line item is like for June-July period with a quantity of 10 users, right? 10,000 users at the rate of $5, right? And I'm assuming that there is another line of 13,000 users with $5. No.
That is the thing, because we wanted a single POB, and that is the complexity of this design. Because we wanted one line to show the complete value. Okay, so for SD01, you can see here, when I created the contract, I have only one line. Okay, for subscription. So what we are saying is the order is giving the total quantity, sending out the total quantity of 72,000, and the individual bi-monthly quantity is coming through the planning item. So in the planning item, you can specify the quantity. It's bi-monthly in advance, and then in the RAR system. So it will, again, when you do it for your customer for a specific scenario, you'll need to see what kind of enhancement you want to do. But planning item can send in the quantity. So source system has to decide how it needs to send the quantity. And then RAR needs to know where to catch the quantity for its calculation. So that is the handshake which we have to design.
Again, this is more like a contract modification, right? So each scenario, what you're saying is, instead of adding additional line for a different user count, If same user count, same line, we'll increase the user count and send it to RAR and generate separate RAA lines, which will maybe have separate lines created, RAs for the SDPI or SDI side.
So
That may be.
in our scenario, actually, because we did consider this option also that we modified. So initial contract is a single phase, 10,000 for all the months, and then in the month of August we increase, right?
Right.
But that is not valid for our scenario because upfront, at the time of contract creation, we know that the number of user is going to increase, and we want the total contract value to be 360,000.
Okay, so yeah, upfront but some case we are in case of upsell scenario, right? Customer can come back anytime. They can increase the user count. So they want to use additional 10,000 users, right? They can add anytime on the course of contract period.
So if we are talking about not usage but the number of users, we already have that covered in our contract modification, where the number of user is increasing by 3,000,
right?
And this is also reflected on the same line.
Okay.
We don't have two separate lines for this modification coming in.
Correct. The existing functionality should handle the contract modification part of it. If you increase the same line quantity.
Yeah, we want to show that. We wanted to ensure that we cover everything using a single POB. So, right. So now we are going to do the contract modification part in the month of September. So here, you see we have the SD01 rise, which is 2. So why? Because at the time of contract modification, one, we are having upsell. You have 2,000 additional users at a discounted rate. Second, you are giving a freebie, 2 months of professional services, right? So that's the reason I have two different lines for the SD01 here. So I'll quickly restore these and I will process these. And once that is done, what I will do is the planning line item is also something which I will process. Okay, so our moment of truth. Let us see. We expect to see two POBs here and a different revenue spread. Here you go. We have cloud subscription, which is the 2-dimension POB that we have based on the user days. And we have professional services, the freebie, which has a standalone selling price of 10,000. That is coming based on the number of days in the month. Okay, so we have this two. Now let me pull up our Excel so we can validate the numbers. You have modified user days here and you have the values of revenue values. So let us touch on September. The value is 65177.23. We have the same value here. In terms of POB2, for example, if you see in the month of October, the value is 3824.48. We have the same value. So the revenue spread is exactly how we want it. The quantities that we see here are exactly the quantities that we want to see. Sure. Sorry. we have this POB, standalone selling price for POB1, mode subscription. And let me go to this POB. $10,000. So for second POB, the professional services is a standard one, and for this other one, you will see we created a custom deferral method Z. So we did this. So now next point, we go back to our schedule. So see what we have to do is we have to do the billing for this 2600, the 2000 additional users. So I have to restore my rise for this invoice. This is my rise. And then we will see the quantity of 2000 and the correct invoice amount. And the correct invoice amount. And this is the place again, we can go back to our normal month and close period, run the program A and the program B. So I changed the month to September. We transfer the revenue. And this is done. So what we can do is again, go back to our contract liability and contract asset, change the period and process it. So we have this process. Now we can go and look at the FARD posting tables. So to see the contract liability position. Yes. So I think let me again take you back to our Excel. And you will find that this value also tallies perfectly with what we were expecting. So the penny. So we have covered. So what we have seen is already prospective contract modification works the same way for two-dimension POB as well as a single POB. It's working perfectly. To complete our demo, let me quickly go through the last step, which is basically invoicing for the last month. And in the last month, I'll do this. Restore the POBs. Restore the rise, and then we have to process the rise. So refresh the RAR schedule. We'll see the amount 30,000 as a quantity and the invoiced amount. Now we can do the month and close process for the month of October. Revenue transfer done. Now comes the contract asset, contract liability calculation. And we can see the position, contract asset, contract liability position. We see a value of 70,503.54. Let us take a look at what we expect. Exactly. So it tallies to the penny. You can see this amount, contract liability tallies. The total receivable 374,600 is in the invoice correction posting category, and the revenue recognized is available here. So it tallies perfectly. So the two-dimension POB works the same as one-dimension POB with contract modification as well, and RAR can handle it. It's completely well handled. Now what I will do as a last step is I will walk you through what we covered, just to note down the salient points of what we did today. What we looked at was the multi-phase cloud deal using a single performance obligation. That increased the complexity multifold, because having two lines was an option we could have done. We didn't want to do it. We had to have a single POB. So that was there. The two-dimension POB representing the user days. That was a new concept. Then the single dimension with the day-based revenue recognition pattern, we saw the professional service for that. We saw the day-based contract modification using the optimized contract management. We did a mid-month change. Okay? And finally, what we saw was that the revenue disclosure was exactly what we expected. It was available at each and every month at every level, and that the balance sheet position was exactly as we expected. So, as long as you are giving the correct input to RAR, RAR can give you the output you expect. So, thank you. So, yeah.
All parts of the scenario need to be optimized contract management. So people are asking us item 2.
No, it is what we wanted to do was we wanted to show the day-based mid-month changes, contract modification. Yeah, yeah. That's the reason why we had to do this for the professional services.
One question. So this is like a regular process for subscription-related industries, right? Like kind of because like when we sign the opportunity or a contract, at that time the customer decides like whether to go with the increased set of users or not, from which time they want to have the increased set of users. So since like SD document is already created, like that is itself like taken as an operational document for us. That is a source we are feeding to RAR. So I understand like you are feeding through an Excel file and you're modifying the quantity and the price from the specific set of duration. If you are going to have that in our SD document, right? How are we going to change the quantities here? Because changing the quantity is definitely a contract modification, right? It is treated as a prospective calculation, right? And it is already available in the standard RAR. So what is the difference? Like how we are going to feed the different quantity from the set of duration from SD document?
This is where, it's a best question for us SD consultant. But based on our analysis, what we found was that you have billing plan for our POC, right? The source system has to send the values somehow, right? And billing plan we had decided was a good way to send the data, the number of quantities that we want, because the total quantity is coming in any case, and the revenue segregation is being done based on the number of users. So RAR just needs the number of days. So what we did was, you have the planning line item, and in the planning line item you specify the quantity. So that is actually sending. So you have to enhance your SD to include those change in quantity.
Yeah, that's a milestone billing plan, right? Like what she is saying is like about a milestone billing plan. If it is a periodical basis, right? You cannot able to specify a quantity in the billing plan, right?
No, that is the enhancement.
That is the enhancement.
That is the enhancement. So we are not talking about the milestone billing plan because that's what our SD consultants also told us, and that is the reason why we said that SD is better than BRIM to some extent. The gaps are less, but still. But the thing is, for example, BRIM has a very good. You see quantity there in the billing plan of BRIM. You see the quantity available for each month for the duration. You can easily go and modify the billing plan for BRIM, right? And the easiest thing for that is, they have. I think it's there in the roadmap. The quantity would flow into RAR as well as the billing. That is already there in the roadmap. Maybe you will see it sometime next year.
Other thing is,
that is what I believe. I don't have the roadmap with me. The development is the best team, but that is understanding.
operational document level, we cannot add a quantity at bill plan level, right? That's enhancement how we can do. This is a big enhancement.
That's what we said. SD and BRIM both have gaps. And it's the source system related gap, and that's why for the prototype, what we said was we made it solution system agnostic. We want to see how does RAR give you the result you want. RAR does it. Now, how you handle your source system, how you send the data to RAR is the source system consultancy.
The only thing is, other option is we have one line, so operation contract level, and the quantity is increased, it become a contract modification as a prospective change, but still we can generate RAIs on SDOI and SDPI based on the change date in October, August or September date change. Then we can generate new RAs for SDPI and SDOI, and that can handle that way also situation. We are not required to do enhancement for quantity change. So we can change what is the actual quantity is 10, increased quantity is 3, we have 13 quantities increased, right? So total quantity 13, we recalculate the value and repass the RAI lines based on enhancement, user exit, or baddie level.
I mean,
that we can do.
There could be different ways of looking at it,
Yeah.
but then one point we need to keep in mind is that 10,000 and 13,000
Right.
is part of one, right?
Yeah.
Initial. Then when you do the modification for 2,000 additional users, the total quantity changes from 72 to 78,000 in your sales order line item.
Again, I agree with this is a different use case.
Yeah.
I'm talking about in normal subscription in the high-tech industries. Customers say they come back, they want to do upsell. So we have example like, in ServiceNow case, they do have UC colleges. Right? They keep on adding colleges. So they keep on increasing licenses, right? Count. So when they add count, they will increase the quantity. They put upsell and increase the quantity in line level. And that will recalculate the revenue, numbers and other things. It's more like a contract modification.
Yeah, it would lead to that. But the thing is, what in this scenario, for example, you want to say it has to reflect in a particular month, right? So you need to the billing plan. You need to specify the time. That's why we had to go to the billing plan item and say in September we increase the quantity. We are not increasing the quantity in August. So in the September billing plan, we have to go and make it from 1st September and from that 1st August until 17th September, it is so many days, and 18th September onwards is a different day. So this is the reason.
Okay, we got a few questions in the chat that might help clear a few items up. So basically, one question was, is the solution being released now for ECC customers or in the future? So I guess the question really is, can you do two-dimensional or two-dimension POBs now with ECC or RAR 1.3?
So yes, two-dimensional POBs, because it is a custom default method, we can do it. But if you want day-based contract modification,
that's not the question we asked. Yeah, that's different. Yeah, that's okay. Okay, the next question was, they said you introduced the Z table. Is that right? Okay. So they're asking, do you anticipate any performance issues with that?
Well, what we have made is something which is for this prototype. The final production ready solution in that we will take into consideration the performance aspects of that.
Okay, so it's still to be evaluated. Okay, the last question is a little more involved, but one question was, how does the credit memo, debit memo impact the revenue after the mid-month modifications are made with reference to the old price quantity? Does that make sense?
This would normally should work normal the way it has to work, the normal credit memo and the debit memo.
Okay, so standard functionality should be okay, basically? Okay.
Thank you.
All right. All right, Pete, I think that's the last thing we had. We have open questions. Any open questions, discussion items, anything, anybody? So to recap, we saw a lot of great stuff today, right? We learned about, and this is always a reminder for me, right? We have the ECC world, and that's Martin's world, and we have all the work that Volkmar and Gerald are doing around the HANA world. So let's remember that, those are two aspects going on. Thing one, we heard about some great lessons learned from the man, Dayakar. So thank you very much for that. Our team presented some interesting scenarios. Remember that the whole concept of the scenarios and the migration discussion we'll follow up on, right? So we had the Fiori tiles that came up. Lots of questions on the Fiori tiles and segregation of duties, et cetera. Pete and I will follow up on those. We had some prospective change scenarios that we'll revisit. Migration is a huge topic, so we'll put together kind of a working group around the migration scenarios and different opportunities there. My friend Jay over here and the rest of you want to talk a little bit more about usage-based POBs. we saw a great presentation about the fact that you can have, I think the whole idea here, Joe and team, was, yes, you can have two-dimensional POBs. They work. You proved it out. It sort of reminds me of when we all go back, if you've been here long enough, to variable consideration and call-off orders and forecast true-ups. We're working through a process, right? It's a process, so we're getting there. But, thank you for a great demo. And then, I guess we'll have a couple of other items to follow up on. I'd encourage you all to join the next group, which is on November 18th. But we are starting at 10 o'clock European time, so that'll be interesting. 3 a.m. this time, yeah. You could be up late from lots of different things. The other one I do know we are looking at, Pete and I are talking about, is some thoughts around high volume billing and BRIM. So look for more about that. And telcos sometime, early next year?
Yeah, I mean, we've had comments of, maybe we should do one in the Boston area, New England, also potentially subgroups around telco and high tech. So anyway, stay tuned. We've got a lot of interest. If you guys have any other ideas or any other customers interested in hosting, just send us a note and we'll try to fit it in. Yes, you want to do it? Yeah. Adobe's thinking.
We're just going to put a microphone